Market open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London, and these are top stories. Joe Biden and Kevin McCarthy set up lobbying efforts in Congress to win approval of their debt ceiling agreement. U.S. and European equity futures, along with treasuries, are mostly gaining. A key gauge of Chinese stocks is set to enter a bear market as pessimism builds. Beijing rebuffs a U.S. request for the nation's defense chiefs to meet. Plus, the Spanish Prime Minister Pedro Sanchez calls early elections after his Socialist Party suffers a crushing defeat in regional ballots. We await May inflation figures. So we are expecting that CPI out of Spain, also giving us possibly an indication of what the ECB could do next. Futures, you can see, actually pointing to a higher start. Now, it all has to do with the debt ceiling. Watch out for any sudden moves in T-bills like we saw in the last couple of weeks. But there does seem to be much more hope amongst traders, both on the bonds and the equity side, that this debt accord will head off a default. Again, White House and Republican congressional leaders are stepping up lobbying in support of the deal. So as things settle, let's also look at commodities. Some of the biggest moves that we saw last week actually came from not only iron ore, but Brent. You can see 76 for Brent iron ore, currently down 2%, and equity indices opening and pretty much stabilizing. For the moment, they're unchanged, but we did have futures pointing to higher start, so we're probably going to see similar moves when they settle. The other thing we're watching out for is any sudden moves, not only in German 2-year, French 2-year, and Italian 2-year, linked to the debt ceiling, as there could be, of course, movements across the board. The other thing we're watching out for is, of course, treasuries. We'll get onto that in a second, and then you can see sterling 123.50. So let's get onto treasuries and actually contracts on the S&P 500 and a lot of the futures in the U.S. also pointing to a higher start. Again, when you look at some of the things that they're watching out for, we have a packed week in terms of data. Later today, we have Eurozone economic confidence. We have U.S. consumer confidence later today as well. The U.S. 10-year yield 3.7520. Onto Spain, because Spain, one of our top stories after those early election calls, but also preliminary May harmonized CPI rising to 2.9%. It's not as much as traders were expecting it to rise. Euro dollar 106.92. So we'll have plenty more, of course, from Spain to see also the ramifications of what this means for the Prime Minister that now has called for early elections. So that preliminary May harmonized pretty much as expected, actually not as high as expected. It's fallen some 0.2%. Now, the White House and Republican leaders have ramped up their lobbying campaigns as they look to win support for a deal to raise a debt ceiling and also avoid a default. Now, for more on all of this, we're joined by Bloomberg's Bruce Einhorn. Bruce, good morning, good afternoon. It seems like things are getting better, but how much progress concretely are President Biden and Leader McCarthy making in getting those votes?
Well, Francine, it's too early to give specific numbers, but both President Biden and Speaker McCarthy have expressed optimism that they are getting there and that this deal will pass. President Biden said, "I feel very good about it," mentioned that he had spoken with Mitch McConnell, the leader of the Republicans in the Senate. Members of the White House have been working the phones, lobbying Democrats, calling about 60 by early Monday. As far as the Republicans go, actually, one other thing before we get to the Republicans, I'm sorry, is the leadership of the moderate Democrats in the House have come out in favor of the deal. So another good sign from the Democratic side. On the Republican side, Speaker McCarthy has said that he expects a majority of the Republican members of the House to support the deal. So when you add up the members from the Republican side who Speaker McCarthy says will be there, and then on the Democratic side, the moderates, we're getting close to the 218 that they need.
So that's for the positive sides. What kind of opposition are they actually facing?
So on the Republican side, you have the members of the House Freedom Caucus, which is a very conservative group of House members. Several of them have expressed opposition to this deal. Several Republicans in the Senate have expressed opposition. Republican Governor of Florida, Ron DeSantis, who recently declared that he's running for president, he has expressed dismay about the deal. We haven't heard from former President Trump yet, even though in the past he has said it would be better to default than to accept a bad deal. So there's significant opposition on the Republican side. Whether there's enough to really stop this deal from going through, we have to see. On the Democratic side, there are some progressives who are upset about some of the provisions, such as a natural gas pipeline that's going through West Virginia. The head of Sierra Club, the large environmentalist group, has opposed the deal for that and some other reasons. Again, though, whether there will be enough of those to stop the deal remains to be seen. So far, it seems that the momentum is on the side of President Biden and Speaker McCarthy. The earliest a vote would take place would be Wednesday in the House. In the Senate, if it passes the House, it goes to the Senate. Chuck Schumer, the leader of the Democrats in the Senate, has already given notice to members of the Senate. They should be prepared to work over the weekend.
All right, thank you so much. Bruce Einhorn there with the very latest, of course, as Biden and McCarthy work lawmakers to push this through. Now let's also bring Raffaella Tenconi, Chief Economist and founder of ADA Economics. Raffaella, thank you for joining us. It does seem that when the president, but also congressional leaders call personally lawmakers to say you have to vote for this, we're closer to an agreement. But is it a big question mark if we get there?
Hi, good morning, everyone. No, I think the deal will pass. I think in terms of outlook for the economy, the impact is relatively minor on the downside for next year because there is going to be some fiscal consolidation. To me, the most important thing right here is the message. Is the message that politics is changing. It's becoming more old-fashioned politics, if you wish, which means it's very polarizing. And you shouldn't expect agreements to be reasonable. You should expect, especially the right-wing side, to be more aggressive and less market-friendly over time. You should also expect that elections aren't going to necessarily align with what opinion polls are saying, just like we saw in recent elections. So I think this deal is important because you watch the dynamic of both sides, but the deal will pass. And it has very important repercussions for the long-term outlook in the next few years.
So, Raffaella, what kind of longer-term economic repercussions does it have? We understand that some of the spending cap, of course, could be put in place, but does it change the composition of the American economy, including its outlook for inflation?
So in terms of the impact on the economy, at least it delays the problem to 2 years down the line in terms of the debt negotiations. But in terms of budget impact, it restrains spending. In fact, most of the spending is restrained below inflation. So it's lightly anti-inflationary. At this stage, we think U.S. inflation will be at 2% at the end of 2024. So it does help on that front. What I mean when I say this is old-fashioned politics, I mean that when you have two camps that are negotiating purely to win, not necessarily to advance a certain idea, eventually you get just bad policies. So the sovereign credit risk goes up.
If you look, and I want to get to some of the inflation, maybe the sticky inflation that we're seeing in Europe and focus on the Spanish numbers, but talk to me about the labor market in the U.S. Are you expecting it to stay resilient? And if yes, for how long?
So in the US, we do think that they will see a little bit of unemployment rate increase in the next year because it has generally a more flexible labor market. But in general, our big theme is that we are in a very, very tight labor market as a trend. In the US and in the EU, essentially, it's practically impossible to get unemployment rates up in a meaningful amount like a normal business cycle. And this is due to a few reasons. First of all, you cannot possibly underestimate how much pressure the green, energy, nearshoring, defense spending, all of these transitions which are embarked and are going to carry on no matter what politics does, really demand labor. So these things are needed, first of all. Second of all, even today, pretty much anywhere between 20 and 30% of companies report bottlenecks to production because of shortage of labor, not even high-skilled labor, just labor, right? So the problem is that it's very, very hard to engineer unemployment. And besides that, even the fiscal tightening that we are agreeing to is relatively light, compared to other things. So you just don't have the conditions to engineer high unemployment rates anywhere, frankly.
But Rafaela, when you look at the worsening economic outlook in the U.S., does it actually lead to a credit crunch? And if you look at inflation, what the Fed does, I think it's probably the only question one has to ask oneself.
So at the moment, yes, we are slowing the economy. So U.S. probably goes into a shallow recession at the end of the year. But it's not a protracted recession. The only way you get GDP contracting next year, it would be if Fed funds remain as high as they are now, even in 2024, which is frankly an implausible scenario because inflation is already today in line with their target. And when inflation will be slowing down and consumption worsens relative to now, any central bank is going to ease monetary policy. The question is, what are the long-term implications when next year we flip into positive real rates? And in any case, the economy still needs to adjust to that situation. So it's a long-term drag on potential GDP growth. It's not a question of walking into a severe recession right now.
Yeah. Rafaela, thank you so much. Rafaela Tanconi, their chief economist and founder of ADA Economics, stays with us. We'll have plenty more on that inflation figure in Spain, cooling more than expected this month. Of course, we'll dig deeper into the CPI print with the latest on the elections in Spain as well. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
So I think the main thing we did which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this
Is
story.
there the kind of upside?
Welcome back to the Open, everyone. 13 minutes into the European trading day. A busy week, actually, after the bank holiday, a Monday that we had both in the US and in the UK yesterday. If you look at a lot of European stocks, they're pretty much unchanged, but of course the focus is firmly on the debt ceiling in the US. Now, Spanish inflation slowed by more than expected, nearing a 2-year low. The data is actually supporting ECB doves, who say that the continent's historic price hike is fading and interest rate increases can soon end. Now, for more on all of this, let's go straight to Bloomberg's European correspondent, Maria Tadeo. Maria, good morning. So what does the CPI print actually tell us?
Yes, Francina, what it shows, and I would agree with you, this is more relevant for the ECB and that decision that is coming up in 2 weeks than it would be for the Spanish government at this point, is that inflation is significantly cooling in May, both on the headline number, but also the core. There are some caveats that go into the way that Spain particularly measures core inflation, but it does show that both are cooling down in May. So you could argue a lot of the monetary policy perhaps feeding into some of this. I should also point some of the downwards pressure is coming once again from energy, but also food prices, which had been an issue. Again, as I said before, this is relevant for the ECB, for the Spanish government, now in the midst, essentially, of an election campaign. Normally, this would be good news. The problem the government is facing is that this is very much a political election that has been called for July 23rd. I'm not sure how much good numbers will shape this election. Normally, it's about the economy, but this one feels like a very political vote.
Yeah, can you tell us a little bit more? I mean, this is a bit of a quirk, right? So he suffered a crushing defeat in some of the Sunday regional elections. And so the prime minister, as you rightly say, has called this early election. So, you know, how does he play this?
Yes, and Francine, I think in politics, and sometimes you see that also too on TV, when you don't like what's being said about you, when you don't like the narrative around you, it's time to change up the conversation and rip up the script. A lot of that was the move yesterday, the thinking behind this early election. Remember, the idea was that it would happen this year. It was always going to happen this year, but it would happen at the end of the year. By bringing it forward, there is a shock factor, but also the prime minister is hoping that he can change the conversation, contain that defeat on Sunday. That is unquestionable. It was a win for the Conservatives, but also really changed the debate in the country. It is a risky move because this is a summer election. A lot of people would be on holiday. This idea, too, that a Conservative win would bring in a far-right move. There was a fear factor that used to play well with voters, but if you look at Sunday, it is becoming less and less effective with voters who simply just do not believe this Conservative win would translate into a massively far-right government. And overall, it's a risky move. He's done this in the past. He is, in many ways, a designated survivor. Can he pull it again? We'll have to wait and see in 2 months.
I was going to say, July 23rd seems risky business because, like the Italians, everyone's at the beach.
Yes. It's an election in the heat.
Elections can be won and lost also on the weather. Maria, thank you so much. Maria Tadeo there with the very latest on the CPI in Spain. And of course, the election. Still with us, Rafaela Tenconi, chief economist and founder of ADA Economics. Rafaela, when you look at the Spanish CPI number, that was actually much, much slower than expected. Could you now argue that in the Eurozone, inflation will go down as quickly as it came?
I think inflation is going down quite quickly. It's not yet in line with the ECB's target, not even when you go all the way down to the end of 2024. In fact, it's probably somewhere between 3 and 4% back then. But definitely there is a lot more evidence that pricing intentions across sectors are coming down quite significantly. They're not yet pre-Russia level, right? So we still have a good 6 to 9 months of improvements before we get there. Food inflation is still very sticky, and you have a structural problem with the housing market rents still being highly inflationary, but we've gone a very long way to go. And I also think when you look at economic data, April and the early May data that we have show that the manufacturing recovery that surprised everyone to the upside is stuttering. And we'll need to see whether consumer will remain supportive of the recovery. There is some early signals that somebody is changing a bit their mind and turning a bit pessimistic.
I was going to ask Rafaela, so do you see a turn? And I had a good conversation with the Saudi oil minister and actually Iraq and also the Qatar oil minister last week, where they said, you know, Europe has been very lucky because of the mild weather, and we don't really know what comes ahead as we get into the winter months.
Well, luck is important, and definitely we were lucky, but I think in general there's also a management of the whole crisis that was very favorable, and the fiscal buffers in the energy shock was helpful, as is the fact that policymakers in the EU are really trying to fast track the big transition, so that is helping. I think from my point of view, the ECB has a different challenge to the Fed, in a sense that the ideal strategy, in my view, would be to take the policy rate to a level that is sustainable, to the point that you don't need to pivot next year. Sustainable so that investment can go through, because you desperately need productivity in the long run. It's not, it's keeping a little bit of a lid on inflation. It's not too aggressive, because otherwise you just delay the inflation recovery. And you just accept that you will have wage inflation going forward. I mean, there is not much that you can really do other than showing a little bit of restraint on the public sector.
All right, Rafaela, thank you so much. We also need to get you back on to talk about this new framework, actually, that the ECB has pledged to review the operational framework by the end of the year. Rafaela Tenconi, chief economist and founder of ADA Economics, joining us this morning. Now let's get straight to the Bloomberg. First word news, and drones have damaged several residential buildings in Moscow early this morning in the latest sign that the war in Ukraine may be spreading beyond the country's borders. The mayor of the Russian capital says no one was seriously injured in the attack, the biggest on Moscow since the start of war last February. China has declined a request for a meeting between Defense Secretary Lloyd Austin and his counterpart from Beijing, Li Shangfu. Now, the U.S. Defense Department says the decision is a concerning unwillingness by China to engage in military discussions. Beijing has previously demanded that the U.S. lift sanctions on Li imposed in 2018 over his role in the purchase of weapons from Russia. China's Zhenshu 16 mission has blasted off from deep in the Gobi Desert, showcasing the Chinese space program's rapid progress. While state media reported that the rocket took off on Tuesday morning, sending 3 astronauts to the country's space station. The crewed mission, China's 11th, comes as Beijing seeks to narrow the gap in its space race with the U.S. And that's your Bloomberg First Word News. Now, coming up, we look at the stocks that are moving this morning, including UK supermarkets, after inflation in shops hit a record. This is Bloomberg. You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
Welcome to Balance of Power. This is Bloomberg.
Welcome back to the Open, everyone. 23 minutes into the European trading day. The picture not as rosy as we opened up. Stocks Europe 600 down 0.2%, but of course a focus not only on Spanish CPI coming in less aggressive than expected, but also of course on the debt ceiling. And we're now hearing that the president is actually personally calling a lot of the lawmakers to get this through. Now let's also get your stocks on the move with Joe Easton. Joe, we start with UK supermarkets, our favorite, especially after bank holiday.
Absolutely, Fran. I think I definitely ate too much over the bank holiday, but we're looking at food once again. The supermarkets, we've got the stocks up on the screen here. They've been bouncing around a bit between gains and losses this morning. This after a few bits of news. So yesterday, the Health Secretary, Steve Barclay, said that the government could be looking to actually limit food prices, working with supermarkets and putting in some kind of price controls. Now today we also had the British Retail Consortium data saying that inflation has hit the highest level since 2005 in terms of UK shops. And also finally the third point was that news of Asda doing a deal for some supermarket and petrol stations, which is something that Sainsbury's worked in, so could be some competition there. So lots going on in that space. Those stocks have done pretty well over the past year, given the rising food prices. Marks and Spencer's, you remember, had a massive share price jump last week as well. Some of those gains are coming off today. Tesco managing to rise, though, still up around 0.9%.
Then, Joe, we have actually a CFO change at Nestle. Is it still the world's biggest food company?
I think it is. Makes Kit Kats, which is my favourite. Do love a frozen Kit Kat. That's my recommendation.
Oh, the matcha ones.
Yeah, those are good as well. So Nestle are naming London Stock Exchange Anna Manz as their new CFO. LSE said last week that she would be leaving the company, so that is a bit of a disappointment for them. Their current CFO at Nestle, he's been there for around 8 years, so it's pretty long tenure there. And we also had Unilever separately today announcing that their CFO, Graham Pickett-Thea, is retiring after 21 years, so that's a long stint as well. Nestle had a bit of trouble with some volumes. That stock down 1% on that CFO change.
Okay, now we will think about the matcha Kit Kat for the rest of the day. Talk to us about Around Town.
That's right, so from chocolate to real estate, this is the German real estate firm, massive company in terms of that country. They've got hotels, shopping malls, offices, everything you can think of in that space. Now, they're reporting some weak earnings today. Their profits are down 4.7% in terms of their EBITDA. They've turned to a loss. They did have a profit last year, but that stock managing to rise considering it's fallen so much already this year.
Joe, thank you so much. Joe Easton there with stocks to watch. Also, Turkey's banking index rising as much as 9.5%. That's the most since May 11th. Again, we're trying to read the tea leaves for signs of policy shift in Turkey. Coming up, we'll talk more about inflation. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
The top names at the Fed are on Bloomberg.
Right now, if you had to tip the scales, the next move is going to be an increase or a cut. It's pretty heavily weighted to the increase for me.
Nobody covers the Fed like Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Joe Biden and Kevin McCarthy step up lobbying efforts in Congress to win approval of their debt ceiling agreement. A key gauge of Chinese stocks is hovering close to a bear market as pessimism really continues to build, while Beijing also rebuffs the U.S. request for their nation's defense chiefs to meet. Plus, the Spanish Prime Minister, Pedro Sanchez, calls early elections after his Socialist Party suffers a crushing defeat in regional ballots. May inflation figures actually slow more than expected. Now, this is a picture across the board. We did open on a high, and now a little bit more pressure. Partly European stocks pretty much unchanged, actually. There's a bit of bouncing around. Again, markets trying to stabilize. After yesterday, we had Memorial Day in the U.S., and here in the U.K., market being closed because of a bank holiday. FTSE 100 down 0.2%. The DAX a little bit up. It's all about the debt ceiling. So let's look at what this means for treasuries and some of the moves out there. T-bills, of course, the most sensitive ones that we need to look at, but also look at the sectors on the move. So we did have a couple of earnings. Our Joe Eason did a fabulous job in running out and really telling us what was moving in the UK the most. I know he started with some UK supermarkets. So on the up, we have media, technology, and real estate, all gaining between 0.8%, and then energy down 0.9%. Banks also a little bit under pressure, but they're within a range of up or down 0.8%. So nothing huge. Treasuries, though, and U.S. stock futures have advanced on hopes that Congress will pass a debt accord to prevent a catastrophic default. Backers only have a week left to pass the deal. Now, for more on this, let's bring in Bloomberg senior reporter for global markets, Jan Patrick Barnett. JP, thank you so much for joining us. So what are markets looking at? I don't know whether, we could see some kind of dangerous event like T-bills. I know that's probably the screen you have behind you.
Yeah, absolutely. So I think it's no major danger at this point. I mean, the market was very hesitant to price in any catastrophic outcome from the debt ceiling debate. Anyway, markets never do. They only do when it's getting very, very close and very dangerous. Then they start to react on it because it's so unpredictable. Now we have a deal, but that also means that the market is not going up tremendously. So don't expect a massive price firework from the stock markets. It has to go through Congress, and even President Biden said he's never sure 100% what Congress will do, but he is confident that they will get it done. So let's hope he's right on that case.
JP, apart from T-bills that we're looking for, I mean, is there anything else in terms of part of the markets? I know there's also maybe liquidity concerns in certain pockets, but do you look at T-bills and dollar, or how could you play this if we come to the 11th hour?
Yeah, dollar, definitely. I mean, you can also look at economic sensitive sectors in the stock market that could be moving on it, because if the government has less money to spend, and they have introduced a cap for the next 2 years, it's always going to be see how that money will be distributed across the economy. I would also like to look at what the Fed is doing, because like now that ceiling is in place, maybe they have a little bit more leeway in their next decisions that are coming up. So short-term interest rates for sure, the dollar definitely, and then everything that is economic sensitive in terms of sectors I would watch.
Is there anything else, JP, that when you look at, for example, the inflation figure out of Spain, does it change the game for the ECB and therefore maybe some of the value or attractiveness for some European stocks?
Yeah, well, I wouldn't say that it's totally changing the game, but what is interesting in Europe and in the US as well is that the inflation theme is sort of coming back into the market. We have seen a flip in pricing for the Federal Reserve, not so much for the ECB yet, but it's a reminder for markets that the inflation game is not over yet. It's not won. There's always like this, let's say, under the surface concern that inflation might come back in what shape or form. What will the economy do if there's no recession? Will this actually be really good, or will we then see prices go up again? So I think the market is still a little bit on the edge, not like super nervous, but still watching the inflation game very carefully. And every change in the underlying data there could be something that make investors jittery. But for the moment, we are all excited about AI, and that seems what is the main driver for the market at this point.
Yeah, so we're also looking for NVIDIA, actually, an extremely valuable company that could go even higher. Thank you so much, JP Barnett, there, our senior reporter for global markets. Now let's get to our MLive question. We asked our guests this week, what will be the biggest risk for stocks over the next 12 months? And here's what they said.
I think we're in a challenging period right now, an anticipatory period as to what's going to happen with the debt ceiling, what's going to happen with the Federal Reserve on June 13, 14, and then what happens with the potential for a recession. But longer term, I'm in definite agreement that we should be deploying our cash.
With equities and about near the top of a 7-month range, it's really difficult to see that now, before this being solved, being the proper time for a real, true, genuine breakout.
We don't expect a big bear market either in U.S. stocks.
The market's not pricing in a recession, far from it. I think the market's pricing in normalization. If we actually do enter a recession, and in our view, it's going to be a recession, because of the bank lending standards, because of the lagged impact of rate hikes, as the consumer savings buffer runs out.
We do expect a recession to begin sometime in the second half. And for the equity market, that means down first, and then likely back up, essentially to here.
Well, let's discuss all of this with our senior European equity strategist from our Bloomberg intelligence team. He's Tim Craighead. Tim, always good to catch up, especially on such an important topic with so many cross currents actually impacting stocks heading into the second half. What's your overall outlook for European stocks?
Well, it's not a particularly technical term, but I would say sloppiness.
That's CFA level 4.
Exactly. You think about it. We've got stocks near a record high. We're only a few percent off of where they peaked in 2022, and we're up 20% from last autumn. So there's been a healthy rally. And valuation, while not stretched at 12.5 times forward earnings, does imply a pretty big pivot as we look out over the course of the next year and a half in interest rates. And that does bring the inflation outlook and interest rate trajectory into focus. And broadly speaking, we're still of the camp, we believe the same thing that Bloomberg Economics does, that we're not going to see a tip over in inflation, as aggressively as seems like a lot of prognosticators do.
So NVIDIA, and I keep on being told, look, watch out, because if it gains 4%, then this is a game changer for NVIDIA. Is there an equivalent, actually, of NVIDIA in Europe?
Yeah, it's a funny thing, because it is a case where tech is, approaching, depending on how you define it, 30% of the U.S. market. Could be a little more, could be a little less. Over here, it's 6. So specifically, NVIDIA, we don't have. What we do have is LVMH. So you think luxury goods here and a play on China is what's exciting and a key driver for European markets over the course of the last year. Interesting enough, if you look right now, what's really driving the U.S. market is tech. What's driving European markets use RRG as a function. It's fantastic.
RRG, go.
RRG. Consumer staples and healthcare. It's a defensive market where we've gone post first quarter earnings.
But if you look at LVMH, I mean, they lost quite a lot. I mean, if you put it in context, it's still probably peanuts. That's also CFA level 3. But how volatile could we see some of these stock moves?
Yeah, LVMH brings up an interesting point from the standpoint of it has been a big China play. And there's other elements of the European market that are more dependent on the China recovery story, which has been a big deal. That's one of those risk factors we look at into 2024. Does China stall from the standpoint of where that trajectory is going? European margins are very elevated right now, still at near record levels, where U.S. has fallen with recession worries and whatnot. So that's still a risk factor in Europe. There are a few things that we're focused on here.
Tim, thank you so much. Tim Craighead there, our Bloomberg Intelligence team leader, of course, looking at some of the risk and rewards in European stocks. Now, coming up, a key gauge of Chinese stocks slumps as much as 20% from its 2023 peak. So we discuss that next, and this is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Welcome back to the Open, everyone. 41 minutes into the European trading day. The focus firmly on that inflation print, of course, CPI in Spain, a bit better than expected, or certainly not as high as economists had expected. And then firmly, of course, the focus is on the debt ceiling, with, we understand, Kevin McCarthy and President Biden calling individual lawmakers to try and make sure that the deal is done. Now, stocks in Hong Kong and Shanghai have also closed the session with modest gains. Still, the Hang Seng China Enterprises Index, which is a key gauge of Chinese stocks in Hong Kong, hovering close to a bear market. Well, Bloomberg's chief China markets correspondent, Sofia Ortega-Costa, joins us now from Hong Kong. Sofia, great to speak to you as always. So tell us a little bit more about the slump and why it's actually happening now.
Yeah, exactly. How did we get here? This was an index that was outperforming every single benchmark in the world only a few months ago, and now we're basically teetering on a bear market. It's really a confluence of factors. I mean, we had the reopening story that fell through because consumers in China weren't spending to the extent that we saw in the US and Europe after COVID-0 was scrapped. So that really kind of dented sentiment on the ground, but also geopolitical concerns. Let's not forget that there was some expectation going into this year that US and China tensions would at least thaw, and that hasn't come through either. And now we're getting actually hard data, Francine, on China's economy. The PMIs, all the kind of data for April was quite disappointing, missing expectations, even though we did get a very, very strong set of March data. So really kind of undermining the macro picture there. It's all about confidence right now. If you look at the market, it's essentially showing that investors are almost pricing in a recession right now, even though China is targeting 5% GDP growth this year. The market just doesn't believe it. Investors are not confident, and even if they are, and even if they want exposure to the China story, they prefer to express it either way. As you had Tim Craighead earlier on in the show talking about LVMH. So it's really interesting because even if you want to own China, you own European luxury instead. So crisis of confidence and really kind of downward spiral right there.
So I was going to ask you, Sophia, what can we expect going forward? Is it going to get worse before it gets better, or is there a floor that we could find?
What's really interesting to me right now, Francine, is that, as Bank of America equity strategists put it, it's a market that's too cheap to short and too too mediocre to go long. So it's kind of, we're somewhere in the middle. But what's happening is that investors are selling Chinese stocks because there's a lack of catalyst. So it doesn't take much for this market to turn around. Let's not forget what happened at the end of October and November when COVID-0 was scrapped. Nobody believed it would happen, and then it happened incredibly quickly, and you saw the melt up there. We do have the PMI figures due tomorrow morning, my time in Hong Kong, for May. So a contraction is expected there. When expectations are low, the bar to beat is getting lower and lower. So any kind of indication also of what Beijing plans to do to get that consumer to spend. Consumers are still very cautious, still saving. Let's not forget households' income was really depleted during COVID-0, and unemployment, youth unemployment, is at a record 20%. So any kind of indication of how Beijing plans to fix this could really turn the dial. But right now, sentiment is weak, and it will take a lot to move that needle.
Okay, Sophia, thanks so much. As always, Sophia Arta-Acosta there with the very latest on the Chinese markets. Now let's switch to geopolitics. And China has also declined a U.S. request for the two countries' defense chiefs to meet this week. That's after Beijing raised concerns over sanctions that Washington imposed on its top general back in 2018. Well, Rebecca Chung-Wilkins, our Asia government reporter, joins us now. So, Rebecca, good morning. What is Beijing saying with this messaging?
Well, we had Beijing confirming yesterday that it was going to send a defense minister to this sort of key defense forum that's happening in Singapore at the end of this week. And just within a few hours, we had them officially rebuffing an invitation by the US to have both their defense chiefs sit down in a one-on-one meeting. So it does appear that there's been some very carefully calibrated response. And I think the message is pretty clear. Beijing is absolutely not willing at this stage to play nice. And it isn't responding to those calls from Biden, saying that there's going to be a thaw in relations. Security very much still a sticking point, something that others have called really the irreconcilable factor in the relationship between China and the US. Even while we do see, for example, these ongoing talks that have resumed between Raimondo and her Chinese counterpart discussing commerce and trade, not much practical movement there either. But the fact that there is not even a sit-down, no bilateral meeting planned so far for this weekend does also shift the focus to the rest of the region, the rest of the Indo-Pacific, quite how these US and China tensions are going to refract through the rest of the region, and how US and Beijing are going to be out courting these nations, trying to convince them that it's strategically in their advantage to align with either side.
So, Rebecca, meanwhile, China is also rejecting claims from the US that it's de-risking rather than decoupling. I mean, fine-tune that for us.
Absolutely. I think there is deep skepticism skepticism, both from Beijing and more broadly in the state media, over this attempt by the US to sort of warm up its language a bit, to walk back some of the intensity. And we know, of course, Biden, along with those G7 nations, has tweaked language, talking more about de-risking, less about decoupling that phrase that makes a lot of European leaders like Macron, Schultz, which Biden needs to win over, makes them a little bit nervous. So there's really a shift in rhetoric that, for example, one state media commentary has said is nothing more than disguised decoupling. So very much still a skepticism, a lack of faith by Beijing that this walk back in rhetoric alone will translate to anything tangible, particularly when it comes to all of these economic sanctions leveraged by the US.
Rebecca, thank you so much. Rebecca Chung-Wilkins, our Asia government reporter. Now, coming up, Pakistan's prime minister says climate-vulnerable countries are at risk of falling into a financial debt trap. We discuss the cost of climate change for emerging market nations next. This is Bloomberg.
Big ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open, everyone. 51 minutes into the European trading day. These markets are a little bit undecided whether they want to go up or down. European stocks practically unchanged at the moment. The DAX gaining, but the CAC 40 is actually down 0.4%. The focus firmly on inflation in Europe. The focus also on the debt ceiling in the U.S. Now, let's also take a look at some of the things that markets are watching out for today. 10 a.m. UK time, we'll get a final reading of Euro area consumer confidence for May. 2 p.m., European Central Bank Governing Council, Robert Holtzmann, will speak at a banking event. At 4:45 p.m., the ECB's François Villeroy de Gallo will deliver comments at the Paris FinTech Forum. And there, of course, are Fed speakers later. 6 p.m. UK time, Federal Reserve of Richmond President Thomas Barkin will speak on monetary policy at an online event. Now, from farmers to governments, many in emerging markets are falling into a climate debt trap as unpredictable weather coincides with the surging borrowing costs. So far this year, cyclones have battered Southeast Africa, the Horn of of Africa has been hit with the worst drought in 4 decades, and record temperatures are currently being recorded across Southeast Asia. Now, for more on all of this, let's bring in Bloomberg senior Africa reporter Anthony Sgwatsin in Johannesburg. Anthony, thank you for joining us. So how are the rising rates actually disproportionately hitting the most vulnerable countries?
Okay, well, thanks for that. The poorest countries in the world are generally the ones that are hit hardest by climate change. That's across Africa, Southeast Asia, perhaps parts of Latin America as well. And they're fairly indebted. So they're having to deal with these natural disasters, droughts, floods, rising seas, and at the same time borrow more money. But that's very difficult when you've already got a large debt load and you're struggling to pay that back. So the countries that haven't caused climate change in terms of emissions tend to be paying the highest price.
So what's the likely end result here for some of these nations?
Well, if things don't change in terms of the amount of climate finance available, we're going to see countries stepping back from spending the money they need to strengthen roads and bridges, build irrigation schemes, and build buttresses against rising seas. So every time we have a natural disaster in the future, it's going to be worse and worse. So it's a pretty dire outlook. What probably needs to be done is there needs to be more finance available in terms of grants, concessional finance, and that's something that's being debated quite heavily, and I'm sure will come up at COP28 later this year.
So, Anthony, how much of progress can we actually expect at COP28, and is there anything that could be done in the meantime?
Well, I think these things are always long-term projects. I mean, we just need to see more finance. It has previously been pledged that half of climate finance will go to adaptation, that's strengthening bridges, roads, irrigation schemes, and half should go to mitigation, which is renewable energy. But that hasn't happened. In fact, we have an estimate in the story that perhaps $1 in every $12 that gets spent on adaptation compares to $12 spent on mitigation. So that needs to change. Now, there's a strong push by organizations, countries, and I'm sure they'll take that to COP, and it'll be a major push this year. Whether there's any progress, we'll have to wait and see.
Anthony, thank you so much. Anthony Sgwatsin there, our Bloomberg senior Africa reporter in Johannesburg. Now let's also get to the Bloomberg Business Flash, and prices in UK stores are rising at a record pace as the cost of living crisis shows little indication of easing. Now, according to the British Retail Consortium, shop price inflation accelerated to 9% in the year to May. Lower energy and commodity costs saw some slowing of price rises on staples, including butter, milk, fruit and fish. Overall food inflation remains above 15%. Qantas says running an international airline will be at least twice as lucrative in the post-COVID era thanks to new income from lengthy direct flights and deep cost cuts during the pandemic. Now, at its first investor day in 4 years, the Australian carrier gave an update on its vast fleet overhaul and turnaround plan. The forecast suggests there will be no immediate let-up to soaring fares for international travelers. And Xiaomi is deepening local sourcing in India, where the Chinese smartphone company is seeking to regain lost market share. It's the first time an Indian supplier will make an audio product for the Beijing-based tech giant. The president of Xiaomi India called it a milestone for the firm and proof of its commitment to the country. Then China's Zhengzhou 16 mission has blasted off from deep in the Gobi Desert, showcasing the Chinese space program's rapid progress. Well, state media reported the rocket took off on Tuesday morning, sending these 3 astronauts to the country's space station. Now, the crewed mission, China's 11th, comes as Beijing seeks to narrow the gap in its space race with the U.S. Well, that's your Bloomberg Business Flash. Now, the other story we're watching very closely is what's happening in Turkey after the elections, and of course, investors trying to read the tea leaves on how President Erdogan will put his cabinet. If you look at the changing tea leaves, one of the appointments that could be extremely significant would be Mehmet Şimşek, a former finance minister who advisors to Erdogan have been courting to oversee economic policy. That's according to people close to the matter, and on the back of that, banks in Turkey getting some 9%. Now, that's it for the European Market Open. Surveillance Early Edition is up next, and this is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
News breaks. No one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority. Authorities.
Could face bigger challenges next.
It was going to keep rate World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Joe Biden and Kevin McCarthy step up lobbying efforts in Congress to win approval of their debt ceiling agreement, while U.S. futures and treasuries mostly gain. A key gauge of Chinese stocks is hovering close to a bear market as pessimism builds. Beijing rebuffs a U.S. request for their nation's defense chiefs to meet. Plus, the Spanish Prime Minister Pedro Sanchez calls early elections after his Socialist Party suffers a crushing defeat in regional ballots. Well, May inflation figures slow more than expected. Now, first thing is first, so let's check in on the markets. Now, we did start the day on a high. Now, some of those gains actually petering out with the European stock 600. You can see pretty much flat at 461, flat 0.04% higher. So not huge, but the focus is also on inflation. Of course, in Spain, that wasn't as high as expected. That could make the job of the ECB a little bit easier. The focus also, of course, in the U.S. and the debt ceiling, and we know that Kevin McCarthy and Joe Biden are literally calling lawmakers on the phone one by one to get them behind their plan. The U.S. 10-year yield for the moment holding up 3.7346. Watch out for any sudden movements in T-bills like we saw in the last 3 weeks. You can see Brent 76.36. We had a good conversation, of course, in Qatar, also with the Saudi oil minister about some of the supply and demand going up there. Remember, June the 4th is a big, big deal for OPEC to meet. And then you can see the Turkish lira 20.2962. The focus on Turkish lira is, of course, some of the investors trying to read the tea leaves of what Erdogan does next, how he puts his cabinet together. And we understand from people familiar with the situation that they've also been trying to court the former finance minister, Mr. Şimşek, very well respected amongst economists and, of course, amongst G20 leaders. Now, there is a little bit of a difference between the DAX, that's gaining 0.3%, also gains for the FTSE MIB in Italy, and then the CAC 40 down 0.3%. Now, the White House and Republican leaders have geared up their lobbying campaigns as they look to win support for a deal to raise the debt ceiling and avert a default. Now, President Biden has been personally calling lawmakers to support the bill with a vote in the House, likely on Wednesday, before he goes to the Senate. Well, joining us now is John Bilton, head of global multi-asset strategy at JP Morgan Asset Management. John, great to speak to you. Thank you so much for coming on. You're like Ninja John, coming into the studio to really make us smarter on the debt ceiling. Will we have a deal, or will we? I don't know what the markets are thinking right now, actually, is my question.
Yeah, well, look, I think the markets have clearly sort of seen it as being, there's a little bit of near-term relief. The ex-date where, you know, all hell was due to break loose, that seems to have been averted so far. Clearly, there's a lot of politicking going on in the background, as is always the case with these things. But the agreement between the two leaders, the leader of Congress and Joe Biden, is of pivotal importance. So really, at this stage, I think the market is moving its focus away from the immediate risks and more thinking and digesting, okay, what does this mean for growth going forwards? Maybe takes a tenth or a couple of tenths out of GDP long run, but by and large, it avoids this great unknown which we've all been concerned about.
So it's not the time to play something with T-bills or something like that, or are there pockets of the market which you can hedge yourself in case we don't get it in time?
Well, I think you've got the mechanics of the money markets will do what they do. I mean, ultimately, there is more funding to be done, more T-bill issuance, between $600 and $1 trillion due to be issued before the end of the fiscal year in September. And of course, there's concerns among some that could lead to a big liquidity crunch. Reality, it probably transfers from other mechanisms, things like reverse repo, etc. But it's definitely worth watching. And I think the market will continue to look at that like a hawk. But by and large, at the moment, I think we're going back now to thinking about the Fed, to thinking about earnings, the usual drivers of the economy.
John, I love all your research notes because they're straight to the point and you basically put it beautifully. It's like some of the near-term risks obscure some of the medium-term potential for a lot of the stocks. What are the medium-term potential?
Well, you know, we've been going through a downgrade cycle now for the best part of a year in earnings. Earnings were estimated, excuse me, to be coming in for this year at about $250 per share. They're now looking like they're going to come in around 220, maybe flattish to last year, maybe even slightly down. But what we're seeing is an economy which continues to function beneath the surface, albeit a bit slower. And that doesn't necessarily spell disaster for stocks now that we've repriced them lower. Are they a bit expensive? Yes, they probably are. We'd all like to buy things a little bit cheaper, wouldn't we? But the reality is, now as we look at forward earnings, we've got to start to think about 2024, 2025. And yeah, as we look beyond the near-term risks, those earnings could be going through a process of bottoming.
Unless we get a credit crunch. And I know, again, you think some of there are contained risks in regional banks and also commercial real estate, which is, a bolder call than most that come on here. But when do we know whether the consumer holds up in the US and elsewhere?
Well, the consumer is sitting on around $1.5 trillion of excess savings left over from COVID. True, it's not spread evenly across all of the consumer base. But gradually, as that gets taken down, and we see dis-saving maybe getting it down to around $1 trillion, $1.1 trillion at the end of this year, it means that you've got a substitute for consumption coming in there, and it's a powerful block of money. You know, you can't have it both ways. You can't take all of that down to zero and then assume that we don't get some kind of spending boom. Consumers today are comfortable to use their savings to support consumption because the job market is relatively stable as things stand.
And that holds.
And we think that holds. Okay. We think that holds.
So the implications of some of the asset allocation, do you do it regionally, or if you want to, for example, play China, you buy, an industry that's very exposed to China, such as luxury?
Well, I think we've got a few things that we can play. Chinese stocks look extremely cheap at the moment. But, how much they are reflecting concerns about the region from a geopolitical standpoint, that's open to interpretation. But certainly it's the only region on the planet, based on our long-term capital market assumptions, which has a positive tailwind from margins. So there's a lot of good things there, but I think that you've got to be quite selective. It's a stock picker's market, even today.
And you like treasuries. So when you look at, and I really love your portfolio insights because they're like neat and well put together. You have basically a high conviction on U.S. treasuries, but then if you look at some of the different currencies, so you like yen.
Yeah, we think that the yen, we're seeing it today with the Bank of Japan beginning to get twitchy as the yen has sold off. We feel that we will get movement in Japan. They're just running some way behind US and Europe. We're seeing inflation beginning to pick up there. Would the Japanese like to get off of zero interest rates? You betcha. So we do think that there's support for the yen further out.
All right, thank you so much. John Bilton, Head of Global Multi-Asset Strategy at JP Morgan Asset Management, stays with us. We have that inflation figure actually from Spain that we need to really dig deeper and try and understand what that means for ECB going forward. Now, we also need to check on NVIDIA. We know that the chief executive of Chip, NVIDIA getting the kind of treatment usually reserved for celebrities and sports stars during a trip to Taiwan. And you can see NVIDIA gaining some 2.3%. If you look at some of the AI and the frenzy that it's gotten to some of the stocks As a whole, NVIDIA certainly had a dizzying week. I think on Wednesday, forecast revenue for the current quarter, that was more than 50% beyond analyst estimates. So that's really signaling some kind of explosive demand for the chips powering artificial intelligence tools like ChatGPT. We'll have plenty more on NVIDIA. The company's valuation is closing in on $1 trillion, a market no chip maker has ever hit. Coming up, China turns down a U.S. invitation for a meeting of the country's defense chiefs. We'll tell you why and what it means for relations between Beijing and Washington. That's next, and this is Bloomberg.
Watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China has declined a U.S. request for the two countries' defense chiefs to meet this week. That's after Beijing raised concerns over sanctions that Washington imposed on its top general back in 2018. Now, let's bring back Bloomberg's Rebecca Thune-Wilkins. Rebecca, thank you so much for joining us again. What exactly is Beijing saying with this messaging?
Absolutely. Well, I think it's pretty loud and clear that although Beijing is going to send its defense envoy to this really important security forum that's happening in Singapore over this weekend, it's not yet ready to play nice with the US, despite this sort of walk back in language that we've seen from Biden and others. So officially, they have rejected this request for a sit down between the US Defense Minister Lloyd Austin and the Chinese counterpart. Security remains one of these issues that seemingly some view as irreconcilable, but it's very, very closely watched, of course, in this context by other nations in Asia who are finding themselves sort of refracted and increasingly troubled when it comes to treading a line between China and the US.
So, Rebecca, meanwhile, China's rejecting claims from the U.S. that it's de-risking rather than decoupling. It's fine nuances, but it can really get people going.
Well, Francine, I think from Beijing's perspective, there is no nuance here, in fact, actually, that although Biden has walked back his language and is now talking in terms of, as you say, de-risking rather than the decoupling word, which has really frightened some European nations, that actually one state sort of media commentary saying de-risking is simply another way of disguising decoupling. And I think the important thing for China, at least from Beijing's perspective here, is really whether or not we see a tangible change in the behavior. And despite those meetings on the commerce level between Raimondo and her Chinese counterpart, we still are yet to see any pullback in some of those economic sanctions that the US and its allies have levied. So until we see any real substantive change, I think this shift in rhetoric really isn't holding much water when it comes to Beijing and its policymakers so far.
Thank you so much, Rebecca Chung-Wilkins, there in Hong Kong for us. Now, a key gauge of Chinese stocks in Hong Kong has raced to earlier losses today after trading close to a bear market. Well, weak economic recovery and tensions with the U.S. have left traders with little reason to buy. Still with us, John Bilton, head of global multi-asset strategy at J.P. Morgan Asset Management. John, we talk about fragmentation, we talk about supply chains, again, being rewritten. We know that, for example, Apple's looking more towards India than China. What does that mean longer term about where you want to be invested in?
Well, I think we've got to look at the fragmentation of supply chains as being a sort of general phenomenon. We certainly have seen some big geopolitical events in recent years. You know, start with COVID. We saw some of the fragility in supply chains, the invasion of Ukraine. We've seen the stresses in the energy market. So clearly what's happening is governments are recognizing we may have hit a near-term limit in things like goods, energy, raw commodities in terms of sort of broad globalization. But make no mistake, services globalization is still running very strongly. What does it mean at the margin? I think it means that we potentially are seeing perhaps a move away from the absolute efficiency of supply chains, moving from just in time to more just in case. And that, by definition, means that you end up making investments which may not be as productive as you'd normally hope when you're putting money to work for long-term investment.
So does a just in case look like, John, for John Bilton? Is there a part, I mean, is it almost like a natural hedge, even if returns are lower?
Well, I think what we've got to recognize, it's actually it's a general economy-wide thing. I mean, you may be taking a small amount out in terms of your overall economic efficiency, maybe slightly more inflationary at the margin, slightly less growth. But also there are things that can be done, and Europe's done an amazing job really in terms of pivoting to think, well, if we are going to invest in renewable energy, if we have to think about a broader global supply chain, how do we invest for the long term and potentially create new productive assets, renewable grid, sustainable grid, etc. So it's not all bad news, because what may have done is also brought forward some thinking and some investment, which is much needed over the longer run.
But when you look at the sectors, so I don't know how you play, is China going through a downturn? That means that you retrench in terms of investments that are linked to China, or do you expect policymakers to you know, put in more to support the economy?
Well, it's a tricky one if you look at it, because actually China's done really well so far this year. Coming out of COVID, it definitely had a COVID dividend, ex-COVID dividend, very strong growth in the first quarter, in the first few months out of that. It's now slowing down to a more pedestrian level. I think we've got a situation where the Chinese authorities are likely looking at the world more broadly and thinking we don't really fancy an inflationary spiral kicking off, so we don't want to overstimulate. We're growing at a level which is pedestrian but in line with the rest of the world. It's not a bad news story, but it's being painted at the moment, I think, as a glass half empty story because of some of these geopolitical tensions, which, to be clear, are quite well reflected in valuations as things stand.
So do you buy more into China, and do you go for, how do you play China?
Well, I think, again, it comes down to it being more selective. I think we can see with this constant drumbeat of tension that you're not just going to get folks going and saying, I want to buy China just as a block. I think they're beginning to treat it more as a developed style market, more OECD style, thinking, where are the Chinese authorities putting money to work? We've got an aging consumer here. We've got a more services-led economy. Where do we need to invest in things like healthcare, financial services, rather than the old, you know, construction and export type of boom, which has led China in the past?
John, we also had that inflation figure out of Spain actually slowing more than expected, nearing a two-year low. What does that mean for the ECB? They're also going through some of the framework, right, and how they want to play it, and that will come out from here, I think, until the end of the year.
Sure. Well, look, I mean, you know, a bit like the Fed. You know, we saw inflation begin to turn, you know, back end of last year, beginning of this. we're now 6 months down the line still talking about have we had the last hike. The ECB are not going to take just one data point. No. It's a very welcome one, don't get me wrong, lowest in 2 years for Spain, but there's still signs of strong services inflation, even if goods inflation is cooling down. And make no mistake, the ECB, while they are no longer on the at or a little bit below 2%, they've got a more symmetric target. They have a target nonetheless, and it's a good way down from here. More rate hikes to come, to my mind.
But so are markets mispricing how aggressive the ECB also wants to be to make sure that inflation is under control? And actually, is the most painful part of going back to that target between inflation at 5% to 2% or nearabouts?
Well, you've got to remember, we hear it from central bankers all the time. Policy operates with a long and variable lag. They will keep going until they feel comfortable the trajectory is right. They will speak more hawkishly. And I expect that we're going through a period at the moment where the euro is weakening a bit because of more hawkish pricing getting put in for the Fed. Get down a cent or two lower than here, the euro could be the way to play it, because if you look at the economy in Europe plus the policy outlook, it looks like euro should probably be stronger in the medium term.
John, thank you so much, as always, for joining us. John Bilton, their head of global multi-asset strategy at JP Morgan Asset Management. Now, coming up a little bit later, climate change and the financial debt trap. Why higher interest rates and extreme weather are actually pushing emerging markets deeper into debt. We'll have a full roundup of that extremely important story. That's coming up shortly, and this is Bloomberg. So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
And then Visual Basic Editor, PowerPoint. Click Tools, Macro, and then Visual Basic Editor. And head over to PowerPoint. Click Tools, Macro,
to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and
Visual
analysis
Basic Editor.
live from
Press New
Bloomberg's
Module,
Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, let's look at what NVIDIA has been doing pre-market. It's actually gaining some 3.1%. Again, NVIDIA's market capitalization soared $1.84 billion in a single day and actually drove an AI rally around the world. That was in the last couple of weeks. The company's valuation now is closing in on $1 trillion, a market that no chip maker has ever hit. In fact, one analyst responded with a research note entitled Greatest Beat of All Time. Remember, it was last Wednesday that they forecast revenue for the current quarter more than 50% beyond analyst estimates. Now, let's get your other stocks on the move with Joe Easton. Joe, start with supermarkets. You're looking at UK supermarkets, and good morning again.
Absolutely, Fran. Good morning. So there's loads going on in the UK supermarket space today. Firstly, we had the data today from the British Retail Consortium showing retail prices up around 9% in Britain. That's the highest level since 2005. Meanwhile, the UK government were on TV yesterday saying that they might actually try and cap some prices for things like eggs and milk in the supermarkets. That could be a risk. And then finally, the third bit of news we had was Asda doing a deal for E&G's supermarket petrol stations, and this would encroach potentially on Sainsbury's territory. Sainsbury's shares down slightly, Tesco managing to stay high. They do obviously benefit from the higher food prices, but that is a bit of a mixed picture. Marks and Spencer giving up some of those massive gains that we saw following their earnings last week. That one's slightly weaker. Elsewhere, I'm also looking at the staple goods space. We've had a couple of CFO changes announced. Nestlé, they are recruiting the LSE, London Stock Exchange, Anna Manns to be their new CFO. She announced she would be leaving the LSE last year. That stock is actually falling, though, because their CFO, he's been there around 8 years. He's pretty highly regarded, and this has come as a bit of a surprise that he is leaving. Unilever as well, announcing a new CFO. A bit of uncertainty at both those companies, I think, that is hitting them. Meanwhile, finally, just quickly, WPP, one of the companies benefiting from that NVIDIA push into AI. NVIDIA and WPP, the UK company, are teaming up on AI in advertising. They say this will cut costs in terms of producing adverts, finding customers to target. That's boosting WPP. The best performer on the FTSE 100 today is the advertising giant here in London.
All right, Joe, thank you so much. WPP, you can see gaining some 2%. We haven't even talked about KitKat. We'll get that, of course, in the next one made by Nestle. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Drones have damaged several residential buildings in Moscow early this morning, in the latest sign the war in Ukraine may be spreading beyond the country's borders. The mayor of the Russian capital
Grow
says
and then
no
Visual
one was
Basic
seriously
Editor.
injured
Press
in
New
the
module
attack.
and then paste in the code.
Moscow
Then press the play
since the
button to
start
run
of
the
war
macro.
last February.
Now we have the slides, it's time to make them look nice. Just click Designer and choose one of the templates that PowerPoint gives you for each slide. And we're done. And of course you can make changes and edit the text in any way you like.
PM's official residence in December last year. The Premier had already reprimanded his son, but a recent poll showed 3/4 thought his behaviour was indeed a problem. Global News powered by more than 2,700 journalists
GPT
and
can make your
analysts in
entire
over
PowerPoint.
120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, inflation in Spain has cooled more than expected this month. We dig deeper into the CPI print with the latest on the PM's call for early elections as well. That's next, and this is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
Joe Biden and Kevin McCarthy step up lobbying efforts in Congress to an approval of their debt ceiling agreement. U.S. futures and treasuries mostly gain. Well, a key gauge of Chinese stocks is hovering close to a bear market as pessimism builds. Beijing rebuffs a U.S. request for their nation's defense chiefs to meet. Plus, the Spanish Prime Minister, Pedro Sanchez, calls early elections after his Socialist Party suffers a crushing defeat in regional ballots, while May inflation figures slow more than expected. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, back to our top story today in the White House, and Republican congressional leaders are trying to rally support for an agreement to raise the debt ceiling. The lobbying campaign has ramped up as the U.S. draws closer to a possible default. Well, let's bring in Bloomberg senior editor Bill Ferries. Bill, lots of lobbying behind the scenes. What's it actually going to take to get this deal over the line?
Well, I think President Biden and Speaker Kevin McCarthy are both working hard to ensure that even though they know they'll lose some members in this vote, they're not going to get 100% support. They want to make sure that there isn't a critical mass of opponents on either the Republican or the Democratic side. So far, most of the opposition we've heard from are people you kind of would have expected to oppose the deal, particularly some of the Republicans in the House who, in their political careers, have never voted to increase the debt ceiling. Some of those Republicans say that Speaker McCarthy didn't get enough for their side in the talks, but they were never expected or never counted in the calculations about who would support this. So I think Biden and McCarthy are both looking to just make sure there's no critical mass of opponents and that a vote can happen fairly swiftly this week.
So, Bill, what are the biggest stumbling blocks?
Well, I think I think on the Democratic side, there are some people who are very much opposed to the increased work requirements for government aid. I think on the Republican side, frankly, some members don't think the spending cuts go deep enough. You essentially have the U.S. government holding relatively flat on spending over the next 2 years. Republicans went into those debt talks arguing for a 10-year cap. So that was their starting position and probably not something they expected to get, but 2 years for some is just far too little.
All right, Bill, thank you so much. Bloomberg senior editor Bill Ferries there with the very latest on the debt ceiling. Now, Spanish inflation slowed more than expected in the year to May, nearing a 2-year low. The data supporting ECB doves who say the continent's historic price spike is actually fading and interest rate increases can soon end. Now, for more, let's get straight to Bloomberg's European correspondent, Maria Tadeo. So, Maria, what does the CPI print actually tell us and what the ECB could do?
Yes, Francine, and if you look at the Spanish numbers, which obviously they provide a preview of the many numbers that will be to come and obviously culminate with the big euro area CPI print, what it shows is that inflation is cooling, but it's also cooling significantly. Now, overall, when you look at the headline number and the core number, which again, the Spanish measure core inflation is slightly different, but the direction of travel is the same. There is downward pressure on inflation.
Now overall, obviously, you're going to get better results if you give ChatGPT the information for the slides. But in this case, we're going to have it write absolutely everything for us. I want you to write me
has already happened. We've now entered the final stage, maybe higher for longer, but nonetheless, the bulk of the work of monetary policy has been done, and now it's a waiting time. That is for the monetary policy. That is for the ECB decision that is due in about 2 weeks' time. There's also the national dynamics of this for the Spanish government. In theory, this should be good news. Inflation had been a big narrative in the country, but obviously with this new election that is now expected to take place on July 23rd, a lot of this is up for play. Will the economy be significantly enough to change things for the Prime Minister?
So what's the thinking behind calling this election in July? I know, Maria, you intimately understand, of course, the inner workings of Spanish politics. It seems like a big gamble after he lost some regional elections yesterday. And also the 23rd of July, we haven't really seen many elections in the middle of the summer.
Yes, and Francine, you know very well in multiple countries, especially in the south of Europe, when you get to August, you clock out. It's a summer holiday. So a lot of this means that if you're going on holiday where you have to prep a way to vote by mail, and if you were expected or wanted to take a holiday, maybe you're not going to do it on the weekend. But a lot of this could have serious implications on the turnout. A summer election is always a big gamble. But the Prime Minister has two things in mind. If you don't like what people are saying about you, if you don't like the political narrative around you, you often try to change it as a politician. That's what he's doing. He is ripping up the script, trying to insert new talking points in the conversation. He woke up yesterday to very bad media coverage, essentially suggesting that he was a loser, and not just the Socialist Party, but really the entire left-wing universe of Spanish politics. Unquestionably a victory for the Conservatives. He's trying to do damage control, but also really contain, and this is the key, the narrative that the country has already started a new election cycle, changing from left to right. It is a risky move, but he's taken big risks in the past, sometimes paid off, and he's hoping to repeat that again. Can it happen? Well, the issue is that they're running almost more than 500,000 votes behind the Conservatives.
All right, Maria, thanks so much, as always, for that great insight. Maria Tadeo there on the Spanish elections and that CPI print out of Spain. Coming up, what will be the biggest risk for stocks over the next 12 months? That's our latest MLive Pulse question. We'll speak to Tim Craighead. We'll bring you the results next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
I think we're in a challenging period right now, an anticipatory period as to what's going to happen with the debt ceiling, what's going to happen with the Federal Reserve on June 13, 14, and then what happens with the potential for a recession. But longer term, I'm in definite agreement that we should be deploying our cash.
With equities in about near the top of a 7-month range, it's really difficult to see that now, before this being solved, being the proper time for a real, true, genuine breakout.
We don't expect a big bear market either in U.S. stocks.
The market's not pricing in a recession, far from it. I think the market's pricing in normalization. If we actually do enter a recession, and in our view, it's going to be a recession, because of the bank lending standards, because of the lagged impact of rate hikes, as the consumer savings buffer runs out.
We do expect a recession to begin sometime in the second half. And for the equity market, that means down first, and then likely back up, essentially to here.
Well, Bloomberg guests there answering our MLive Pulse question, what is the biggest risk to stocks over the next 12 months? Now, let's discuss all of this with our senior European equity strategist from our Bloomberg intelligence team, Tim Craighead. Tim, thank you so much for joining us. So first of all, what did we find out? There's like, a short-term risk that is not necessarily longer-term kind of advice for stocks.
Yeah, I would agree with some of those folks that were just commenting. Our outlook into mid-year and into the second half is one of a mixed market volatility, sloppiness, if you will. At this point, valuation is not stretched. It's 12.6 times forward earnings. Earnings are now coming through, if you look at 1Q earnings, much better than expected, far better actually on a comparable basis than what we saw in the States. But you also have to realize the second half earnings outlook is for very muted growth, if not even a decline in earnings before we see some acceleration in the next year. And there are an awful lot of externalities that can create volatility with stocks at this point, close to record levels. So, it's a funny thing in that, there's a lot of worry. Stock's pretty elevated right now, and we think that continues to cause a little give and take.
Tim, the other thing, we're all obsessed with AI, and we're all obsessed with NVIDIA. I mean, this is just an incredible story. So last Wednesday, they came out with a forecast, and I think it beat 50% beyond analyst estimates. I mean, this could be the greatest beat of all time, and it could get to $1 trillion in market cap.
Well, and not only was it a beat by that much, but it was a beat of a big number. So it's like the law of large numbers don't count, right? It's interesting thinking about tech and where it's going. The positive is it's clearly driving the U.S. market from a sector perspective. If you look at RRG as a function, the tech stuff is in the upper right, quadrant, and it's big. We don't have the equivalent here. Technology is 6% of the European market. It's almost 30% of the U.S. market. However, tech isn't always so great. The reason why there was an earnings recession in the U.S. for the second half of last year and into early this year is because of technology. Where here, we've had better than expected earnings coming through, driven by things like luxury goods. So, our equivalent in Europe, LVMH, but, clearly it's a wholly different business and driver.
Yeah, it certainly is. And so the dynamics, of course, are very, very different. Tim, talk to me a little bit about risk and rewards going forward. So where do you see the main pitfalls?
So There are definitely external issues that we've got to stay on top of. The U.S.-China tension, and a little of that might be European-China tension. It's a geopolitical factor that we hope doesn't go pear-shaped, but we've got to monitor. Fine. The U.S. political cycle is going to accelerate over the course of the next 6 months. And I think discussions about energy transition and how supportive the U.S. is with that big package that's currently plowing through markets and expectations may be a topic of discussion. The biggest single European issue to me, I'm going to sound a little bit like a broken record, is margins. It sounds really basic,
then press the play button to run the macro.
Europe right now,
now we have the slides. It's time to
which is close to peak levels,
Just
only
click
better in 2007. And margins tend to be cyclical.
And choose one of the templates.
We've plateaued for a year.
I mean, you talk about this big package in the U.S., which is the Inflation Reduction Act. Does that take greening, the economy and technology away from Europe and put them in the U.S.?
Well, thankfully, there is the European equivalent program.
Yeah. Smaller.
It's smaller, but it's still sizable. And even though there is that, Make It in America sort of context of the U.S. program, there's certainly European companies that are benefiting from that spending as well. So hopefully it doesn't go away. Hopefully this continues to be a big secular stimulus that will play through the global economy.
Okay, brilliant. Thank you so much for joining us. Tim Craighead there from our Bloomberg intelligence team. Now let's also get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Prices in UK stores are rising at a record pace as the cost of living crisis shows little indication of easing. According to the British Retail Consortium, shop price inflation accelerated to 9% in the year to May. Lower energy and commodity costs saw some slowing of price rises on staples, including butter, milk, fruit and also fish. Overall, food inflation remains above 15%. Now, Qantas says running an international airline will be at least twice as lucrative in the post-COVID era, thanks to new income from lengthy direct flights and deep cost cuts during the pandemic. At its first Investor Day in 4 years, the Australian carrier gave an update on its vast fleet overhaul and also turnaround plan. The forecast suggests there will be no immediate let-up to soaring fares for international travellers. And Xiaomi is deepening local sourcing in India, where the Chinese smartphone company is seeking to regain lost market share. It's the first time an Indian supplier will make an audio product for the Beijing-based tech giant. The president of Xiaomi India called it a milestone for the firm and proof of its commitment to the country. China's Shenzhou 16 mission has blasted off from deep in the Gobi Desert, showcasing the Chinese space program's rapid progress. State media reported the rocket took off on Tuesday morning, sending 3 astronauts to the country's space station. The crewed mission, China's 11th, comes as Beijing seeks to narrow the gap in its space race with the US. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, Turkish President Recep Tayyip Erdogan is expected to name a new cabinet in the coming days, with investors, of course, watching for any signs that he's willing to move away from his unconventional economic policies. Now, the most significant appointment would be Mehmet Şimşek, a former Merrill Lynch strategist who also previously served as the Turkish finance minister. On the back of that, I think a lot of the focus is on what bank stocks could do, gaining some 9% on the Turkish stock exchange. Well, Selva Bahar Baziki from Bloomberg Economics is in Ankara, and she joins us. So what can you tell us about this potential cabinet pick and how comforting that would be for international investors, Selva?
Yeah, Mehmet Şimşek is a former finance minister. He served in top economy-related positions before as well, and is quite a market-friendly name. He reportedly met President Erdogan in person just days before the president is expected to announce a new cabinet, and that increases the possibility he may take active part in politics again. Now, in our view, appointing officials like Mehmet Şimşek, who can help restore market confidence, would just be the first step the president can take for a policy reset. Declaring a firm commitment to central bank independence would be the next. the central bank itself would need to start a credibility building exercise
to run the macro. Now we have the slides. It's time to make them look nice. Just click Designer and choose one of the templates that PowerPoint.
Including stealth currency market interventions.
So, Selva, are there any signs that Erdogan is also willing to change his overall approach to the economy?
Well, the country's been following an unorthodox policy framework guided by the president's unconventional view that higher interest rates actually put up inflation rather than the conventional view, then down. This approach has led to a surge in inflation, severely negative real interest rates, taken a painful toll on the lira, and contributed to a ballooning external financing gap. We see the buildup in these economic vulnerabilities definitely calling for a policy pivot. Turkey has local elections coming up in March next year, and this likely means that the pivot that we foresee coming will feature a policy tightening that will fall short of what the economy needs. This may be better for growth in the short term, but it definitely means a weaker lira, higher for longer inflation, and trimmed long-run prospects for the economy going forward.
Selva, thank you. When you look at some of the pitfalls, how soon does President Erdogan have the markets on his side? How long does it take for them to turn if there's no significant change in how he handles the economy?
We have expectations of a high summer tourism revenue coming up. That would alleviate some of the pressure off of the lira, which has been actually suffering and recently hit an all-time low. That follows two currency crises in the past 5 years. At the end of the summer, when that revenue stream is also starting to run down, and with high external debt payments coming up in the last 2 months of the year, we see October as the latest point for a rate hike, potentially.
Thank you so much for all of the insights, Selva Bahar-Baziki there from Bloomberg Economics. Now, coming up, why many emerging markets are falling into a climate debt trap. We'll discuss the impact of extreme weather on countries already burdened by debt. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
So I think the main thing we did, which was not so easy, was to stick with our process. And
then it kicked in big time in the last really 2 years.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, from farmers to governments, many in emerging markets are falling into a climate debt trap as unpredictable weather coincides with the surge in borrowing costs. So far this year, cyclones have battered Southeast Africa. The Horn of Africa has been hit with the worst drought in 4 decades, and record temperatures are currently being experienced across Southeast Asia. Now, for more, let's speak to Bloomberg's senior Africa reporter, Anthony Squatsin, in Johannesburg. Anthony, thank you for coming on again. So how are rising rates disproportionately hitting the most vulnerable countries?
Well, the countries that are most affected by climate change tend to be the poorest countries. Those are countries in Southern Africa, across East Africa, Southeast Asia, and perhaps parts of Latin America. And they tend to be highly indebted at the same time. So when they've had to pay to deal with climate disasters or to strengthen their infrastructure to deal with future climate disasters, they've had to weigh that up against taking on more debt or paying off their existing debt. And often the climate concerns get relegated to the back seat. So it's a big problem.
So what's the likely end result here for these nations?
Well, if things don't change in terms of the global outlook on climate finance, it's very problematic. We're going to see countries not able to invest to buttress their infrastructure against floods and droughts, and build irrigation infrastructure. And every time we have a natural disaster, it's going to get worse and worse for these countries, impoverishing them more and increasing their debt. So it's deeply problematic. There is a big push to boost the amount of climate finance available to countries like this for climate adaptation project, but that's going to need a big shift in terms of how that money's offered, whether it's grants, deeply concessional finance, because they can't really borrow on commercial terms. It's just too expensive for them.
So, Anthony, how do you see this going as we get into COP28? Or is there how likely are we going to get an agreement into the winter?
I'm not sure we'll get an agreement, but I think it's going to be a major theme. We're going to see a lot of the lobby groups from poorer countries push hard for this, supported by big organizations like the Global Center on Adaptation. It's a big focus. I mean, there is money going into mitigation, which is building renewable energy plants, because you can get a revenue stream from it. But there's very little private sector investment in climate adaptation, and not really very much in terms of grants or concessional finance either. It's just a really neglected area.
All right, thank you so much, Anthony Squatsin, there with the very latest, of course, on this important conversation. He is our senior Africa reporter in Johannesburg. Now, let's take a look at some of the things that markets are watching out for today. 10 a.m. UK time, we'll get a final reading of Euro area consumer confidence for May. 2 p.m., European Central Bank Governing Council member Robert Holtzmann will speak at a banking event. Then at 4:45 p.m., the ECB's François Villeroy de Gallo will deliver comments at the Paris FinTech Forum. And then there are some Fed speakers a little bit later. 6 p.m. UK time, Federal Reserve of Richmond President Thomas Barkin will speak on monetary policy at an online event. Now, the other story we're watching out for is, of course, NVIDIA. We're close to a $1 trillion market cap for NVIDIA. You can see 3.1% gain on the back of some encouraging news. I mean, I have to say, it's almost been a dizzying week for NVIDIA. It all began on Wednesday when their forecast revenue for the current quarter was more than 50% beyond analyst estimates. And that really signals some of this explosive demand that we're seeing for chips powering artificial intelligence tools like ChatGPT. Well, Bloomberg Surveillance Early Edition continues in the next hour.
world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Limes.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. Selling the deal, Joe Biden and Kevin McCarthy step up lobbying efforts in Congress to win approval of their debt ceiling agreement. U.S. futures and Treasury rise after the holiday weekend. Drones have damaged several buildings in Moscow. It's the biggest attack on the capital since Vladimir Putin ordered the invasion of Ukraine. And market woes. A key gauge of China's stocks inches towards a bear market as pessimism builds. Beijing rebuffs a U.S. request for their nation's defense chiefs to meet. Good morning. Welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger, in for Anna Edwards in London. She's taking a long weekend holiday. Kriti Gupta in New York, just back for your long holiday weekend. Kriti, I hope you're feeling rested, refreshed, maybe even ready to solve a U.S. debt ceiling standoff.
High expectations for what happens on this side of the Atlantic, Danny, but nevertheless, rested indeed after 3 days. Danny, when you look at the markets, though, and perhaps not seeing the same amount of kind of optimism to the same extent. I mean, you're seeing it, but it's not necessarily coming off of just this debt ceiling story. You're seeing it a lot coming from the tech story, and that's really where the outperformance really shows up. 0.5% already in the pre-market. A big, big caveat to what we've seen in the last couple of weeks. The idea here simply that we've kind of been in this wait-and-see mode for the equity market, but now they are charging higher. How much, though, is this a function of the debt ceiling as opposed to this kind of let's hop on the AI craze story? It's a similar interesting dynamic you're seeing in the two-year yield, because even though we do have that debt ceiling debate kind of potentially behind us, remember that vote at 3 p.m. today, the two-year yield still inching lower. You are seeing a bid into the bond market. So there is that realm of caution there. And I wonder how much of the geopolitics plays into that. We're going to dive into the two-year yield hovering at about 4.52. Remember, the yield story has really been driving driving, is that the right word? The FX story, that's really important. The Bloomberg Dollar Index unchanged at the moment, but remember, you are seeing a tug of war between the most commodity kind of focused currencies, the EM currencies, and your traditional euro, pound, etc. Gold as well, this is really interesting because, again, unchanged here. If we were seeing a little bit more relief or perhaps less relief, we would see a little bit more action in the precious metal right now, 1944 on gold. But I think a lot of this has to do with how Asia is really factoring into the story, and this is really important. You were seeing a major divergence between what you saw in Asian stocks overnight. This is really, really important because China, of course, has been dealing with a bear market or a potential bear market, getting really, really close and then pulling a win at the very last minute. You have the same story, although to the opposite side, with the Kospi index. This is, of course, the South Korean index where a good chunk of their stock market is made with semiconductors. This is really important, higher by 1% overnight. But remember, they are actually hitting a bull market. So even though you see perhaps dodging that kind of hit, the bear market in the Chinese market, South Korea really thriving and outperforming. You saw that overnight as well. The currency story is all that more important as we see the dollar not really going anywhere. The Japanese yen absolutely is slight weakness there, or excuse me, slight strength there, higher by about 0.2% on the Japanese yen. This comes after the BOJ did have a meeting between some of their policymakers. Look, nothing groundbreaking there, but perhaps something in terms of reconsidering the way policy should make it. But this is all in the backdrop of growth and inflation, and specifically Chinese growth, which of course is weighing on sentiment when you look at copper, Danny, down about 0.3%.
It's that same exact Chinese sentiment that's been weighing on France. The luxury story's just been so dominated. The French indices had been doing much better, but that has started to come in. Another day of that. CAC 40, that's underperforming. Looking at the European map, Critty, it is just kind of a spotty day, I should say, because it's not like the U.S. where it's one market, everything is off. Yesterday, you had only a few regional benchmarks not trading. The U.K. was off for a holiday. Switzerland, Denmark, just to name a few. There were a few others in there too. Overall, European stocks ended the day lower yesterday, so you do see the UK, for example, having to play catch up with it. So that means even though there's some divergences, overall just on the surface level, Europe Stock 600 is unchanged. The worst performing stock in the FTSE 100 today is Unilever. It is down 1.5%. I don't know what it is about today, but apparently this is the day if you're a CFO of a consumer brand, you announce that you're leaving. It happened at Unilever. It also happened at Nestle. So something's in the water, apparently, or in the baby powder or whatever those companies sell. Unilever's also going to be losing its CEO soon, too, so a lot of changes happening there. Euro, that's a little bit weaker versus the dollar. It was weaker more than what we're seeing at the moment. We had some Spanish CPI come in, inflation not as bad as expected. That brought a little bit of relief to the ever-climbing euro. Spain also has an election to deal with. An early election is being called by the prime minister, so a lot of politics to work through there. And nat gas, it's now moving higher. Just moments ago, about 30 minutes ago, this was lower. It was at a 2-year low. I mean, it's barely higher. It is still extremely low thanks to the fact that, I mean, it's not a good story, but the economy isn't doing as well in Europe, so that means less demand for nat gas and just a lot of renewable energy. So, Critty, I mean, this is a big change, this number right here, 24, from when it was triple digits in the middle of the energy crisis in Europe.
Yeah, it absolutely is. A lot of doom and gloom out there, Danny, but when you look at futures and you look at sentiment around the world, perhaps a little bit more green on the screen. It's all coming down to one thing where perhaps everyone breathing a little bit of sigh of relief. President Biden and House Speaker Kevin McCarthy reached a debt deal this weekend to avert a historic U.S. default. Biden spoke after the agreement was made on Sunday.
The agreement prevents the worst possible crisis, a default for the first time in our nation's history. An economic recession, retirement accounts devastated, millions of jobs lost. I strongly urge both chambers to pass that agreement. Let's keep moving forward on meeting our obligations and building the strongest economy in the history of the world.
Joining us now, wake up early, Zach Cohen of Bloomberg Government. Zach, walk us through the details of this debt deal. We know that defense, for example, was a major sticking point. What do we know about the kind of givings and takings of this deal?
Essentially what it boils down to is that the White House and House Speaker McCarthy and their assigned negotiators have essentially agreed to keep spending flat over the next 2 years, which obviously in a market that has seen increased inflation, that essentially means real cuts to especially non-defense spending, although defense is being kept at around 3%. Again, that's sort of what we typically be seeing as inflation numbers. And so there's a couple of other factors that are included in there. There are some new work requirements, especially on food programs known as SNAP here. That was something that Republicans really wanted to see included, as well as a codified end to the student loan payments pause that the Trump administration had put in at the onset of the COVID pandemic. So there's enough here that both sides can really come together and say we really need to pass this bill, and now it's just a question of actually getting the votes to do so.
Yeah, do they have it? What are been some of the reactions of the key constituents here that will determine whether it passes or not?
The first vote really to watch really is at 3 p.m. Eastern time today. The House Rules Committee. This is a smaller panel that essentially sets the terms for floor debate in the U.S. House of Representatives. You've got two more fiscal conservatives, people like Ralph Norman and Chip Roy, who have essentially said they will not support this bill, whether they would actually vote to try to block it from coming out of the Rules Committee and essentially bar it from coming to the floor. That would be a really key vote. And then I think the swing vote there could be Thomas Massey, who's a third sort of more fiscally conservative Republican. And the three of them, along with every Democrat on the panel, could cause some problems for that bill coming to the floor. That being said, we don't know that that will be the case. And so if they can come to an agreement on that, then it should go to the floor and get bipartisan support from mostly Republicans as well as enough Democrats to get it across the finish line, with probably a couple of defections, both from the right wing, the more fiscal hawks of the House, as well as more progressive or environmentalist Democrats who are not happy with some of the provisions that have been added to this bill.
Talk to us a little bit about timing here, Zach. The idea here simply being that the X date for the Treasury, June 1st, June 5th, wherever it may be. For the market, someone was saying it was back on Friday. When you kind of factor in the time it takes to actually write the legislation, put it to a vote, what are the chances the Senate clears it in time?
Senate Majority Leader Chuck Schumer has already said that he's asking senators to, be aware and be prepared to potentially stay through the weekend on Friday and then through the weekend in order to vote on these bills. If the House does pass it on Wednesday, which is the plan at this moment, then it would go over to the Senate, and where they could clear it on Thursday, send it to Biden's desk by then. But the Senate has the filibuster, which essentially allows a single senator to hold up any piece of legislation if they have concerns with. This is something that Senator Mike Lee has even threatened to do over the course of these negotiations. No word yet on whether he would actually use every tool at his disposal to do that. You've got others like Senator Rand Paul that could, throw a wrench into the system. That being said, time is running really short to get it through the Senate, which typically takes a couple of days of up to a week to get any bill across its to-do list.
Yeah, really can't afford for things to drag on. Zach, thank you so much for that update. Zach Cohen of Bloomberg Government. So now that a deal has been reached, yes, it still needs to get through Congress, but now traders are switching their worries to what that increase to the debt ceiling could mean for money markets, could mean to the Treasury General account. Joining us now is Bloomberg Global Finance correspondent Shonali Basak. Shonali, because we have this issue right now where the Treasury's coffers are so low. What does refilling it mean? Could that add pressure to the financial system?
Yeah, it certainly could, and that is the worry out there of concern, as you said, is the Treasury General account, which has dropped to the lowest level since 2017 here. And the idea here is that issuance could really bring it back up by hundreds of billions of dollars over the next couple of months alone. This is $1 trillion through the end of the third quarter. So it's a very sizable amount of issuance that's being expected into the market. Now, Danny, of concern here is not only the sheer scale of the issuance, it is also who might be buying. Because traditionally, money markets might have been taking on a lot of that, but there is that RRP facility at the Fed. And the question is, do they start to move money out of that into these Treasury offerings that we're going to see? Or who else would be the buyer? And what other kind of pressures would that put on the market? There's a concern that the banking system might take on some of this as well at a time where people are already kind of starting to get concerned about liquidity, as well as the bank's activity to really flush the money with the economy at a time where we don't really know the path of rates moving forward.
So that's the T-bill story. That's the market read through. Let's talk about the geopolitics here. There's a lot of executives that are going to China this week. We have Elon Musk and Jamie Dimon. Talk to us about how big of a deal this is for Wall Street.
Yeah, it's really interesting. There's a great kind of teaser on the Bloomberg terminal right now talking you through all the details of this event from JP Morgan. Morgan Stanley has a separate event, but JP Morgan's event here, 2,600 bankers, 2 days in Shanghai, CEOs, executives, Pfizer, Baidu, Starbucks. So you have a very significant range of executives coming into China, and the first really large global bank presence, the American bank presence in China since the end of the zero COVID policy. There have been pretty reduced ambitions in China as the economy had been weak. Global banks are making significant job cuts, but at the same time here, there is still a lot of question around the Chinese consumer, and not just for Chinese companies, as we've been mentioning, but for a lot of global companies that are doing business with JP Morgan in China as well.
Well, certainly a lot to digest when you look at geopolitics and the China question that's kind of creating this overhang in Wall Street, but also on the geopolitical front. Shonali Bassick all over that story for us. We thank you as always. And of course, Bloomberg will have exclusive access to JP Morgan's annual Global China Summit in Shanghai. We're going to bring you interviews with JP Morgan executives, including Jamie Dimon, and more tomorrow. Coverage you do not want to miss. And of course, as we talk about China and the banking sector, let's talk about China and geopolitics for a moment. China has declined a U.S. request for the two countries' defense chiefs to meet this week. That's after Beijing raised concerns over sanctions that Washington had imposed on its top general back in 2018. Joining us now to discuss is Bloomberg's Rosalind Matheson. Roz, thank you as always for joining us. What exactly is Beijing saying with this messaging?
Well, there are a couple of things at play here. One is, in fact, that this minister is sanctioned by the US, which makes it really awkward for the Chinese to agree for him to sit down in Singapore with his US counterpart. They've been saying for years that can't happen until those sanctions are lifted. But more broadly, of course, the defense space, the military space, the security space is really the area of high tension between the US and China. And that's one area where China's very clear. At the moment, our militaries are coming into close proximity in Asia. The US government has basically accused China of supplying weapons to Russia that may end up in Ukraine. And that's one area really where they don't want to have any discussions right now. They don't want to have any meetings between senior officials. But more broadly, there is a bit of an effort to get other officials to be meeting, particularly on the economic front, their secretaries of state possibly as well, all leading up to a further conversation even at some point between the president. So there is this approach to try and put things in different compartments. Areas that are too difficult are still off limits, but can we get a line of dialogue opening? So this really doesn't preclude that broader effort to put a floor under ties.
Roz, while we have you, when it comes to the latest with Ukraine and Russia, Russia has said that it downed about 8 drones over Moscow, that were aimed at Moscow, rather. What do we know about this?
Well, we know this is the latest attack on Moscow. Of course, there was the drone that fell on the Kremlin earlier in May, letting off that little firework. But of course, there have been skirmishes on the border between Russia and Ukraine for a couple of months. Attacks really that hit Moscow itself, they're kind of embarrassing for the Kremlin and for the administration of Vladimir Putin, because really what Ukraine is saying, and whether it's Ukraine doing it overtly, whether it's pro-Ukraine groups inside Russia doing it, whether it's anti-Putin groups doing it inside Russia, the message is the same. We're able to reach you right in the heart of Russia, and these attacks are really about sort of like sending that message. So it's quite embarrassing for Russia that this is happening.
Right, and as you say, not the first one either. Rosalind, thank you so much. That's Rosalind Matheson from our Bloomberg Geopolitics team. Coming up on the program, pessimism grows over Chinese stocks. We're just talking about the geopolitics, but it's also a sluggish economic recovery. We're going to have more on that. And we're going to be speaking to Maria Weitman, senior multi-asset strategist at State Street, on her outlook with one hurdle, the debt ceiling, being passed. And we're going to have more on that, too, the debt ceiling, that is, with Thomas Gift of University College London. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
The debt ceiling deadline closes in.
Debt negotiations grind on.
When exactly will the Treasury run out of cash?
Keep it tuned to Bloomberg for up-to-the-minute reporting.
The contours of a deal coming together.
Waiting for a deal.
And first-hand analysis from the political and business leaders who matter.
We're not going to default. We're going to solve this problem.
We have to come to an agreement right now.
The White House stands to lose the most.
What's the trade? What's the hedge?
For continuing coverage of the debt ceiling standoff, keep it tuned to Bloomberg, your global business authority.
Well, there's a lot of questions simply about growth in the United States. The idea here of whether or not the consumer is slowing down, but what about the rest of the world? Now that you have kind of this AI craze baked into the market, now that you have a lot of the debt ceiling saga, perhaps in the rearview mirror, I don't want to jinx it, one of the big focuses moving forward is going to be the Asian story. And I don't just mean geopolitics or supply chains. I specifically mean growth coming out of China. Fears are already baked into the Asian market. For our radio audience, stick with me. We are looking at a chart here of the MSCI China Index, essentially the Chinese stock market that has been really under pressure for, I want to say, going back to, well, mid-June 2021. You're seeing a lot of pain there. And essentially the concern is just how much of the growth is slowing down. Even if China has traditionally put 5-6% growth, we're now looking at, say, 3%. Look, growth is growth, but it is still slowing down at a pretty scary rate. And that is putting a lot of fears into the heart of equity market investors when you looked at China. But at what point does that spill over into the rest of the world? Joining us now is Bloomberg Markets reporter Justina Lee. Justina, is the Chinese growth story something that's being missed by the broader European and American investor base?
Yeah, it's really been pretty surprising, like how quickly the China reopening story has really run out of momentum. I mean, if you look at Chinese numbers there, I mean, industrial profits, property investment, retail sales, all of those have already started, you know, disappointing on the downside. And at the same time, we haven't really had much monetary easing that a lot of economists have been calling for. And so I think if you zoom out, you know, beyond China, I think that typically is bad news for Europe, given that they do, you know, depend a bit for Chinese growth, and the stocks tend to be a bit more cyclical.
This is the thing, if we do get past this whole debt ceiling stuff, how long can this relief rally last? Because if we go back to the fundamentals, I mean, this fundamental and example maybe aren't that great.
Yeah, exactly. And of course, the narrative then shifts to, you know, the Fed trajectory, and people already are getting more convinced that we're going to have another rate hike coming. Of course, we have jobs numbers on Friday that will kind of shed a bit more light on that. And I mean, as you kind of discussed in the last hour, and then we have liquidity worries coming from, you know, this debt ceiling relief. And so obviously today markets are going to enjoy it, but it does feel like there are a lot of concerns down the road.
Yeah, plenty of stuff to still keep us up at night, even with the debt ceiling gone. Justina, thank you so much as always. That's Justina Lee from our markets team. And of course, for more market analysis, MLive Go is where you want to head on your terminal. This is Bloomberg.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China, nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but, you know, we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. Now keeping up to date with news from around the world, here's the first word. More than 30 NATO soldiers have been injured, along with at least 50 locals in northern Kosovo, as Serb protesters clashed with police and then with NATO peacekeepers. The demonstrators were seeking to block newly elected ethnic Albanian mayors from reaching their offices. The worst flare-up in violence in years threatens an EU-brokered plan to normalize ties between Kosovo and Serbia. Turkish President Recep Erdogan is promising a team with, quote, international credibility to manage the nation's finances. A new cabinet is expected to be named this week after Turkey's longest-serving leader extended his rule by another 5 years. Bloomberg has learned the most significant potential appointment would be Mehmet Şimşek, a market-friendly former finance minister. The lira weakened toward a record low after Sunday's runoff vote. Spanish Prime Minister Pedro Sanchez has surprised adversaries by dissolving parliament and triggering a snap general election. The move came just hours after the Prime Minister learned the full extent of his party's losses in local elections over the weekend. His opponents will have less than 2 months to prepare and campaign for the July general election, which had been expected in December. Prices in UK stores are rising at a record pace as the cost of living crisis shows little indication of easing. According to the British Retail Consortium, shop price inflation accelerated to 9% in the year to May. Lower energy and commodity costs saw some slowing of price rises on staples, including butter, milk, fruit, and fish. Overall, food inflation remains above 15%. Danny, 15% inflation and counting over in the UK. Is there any country that matches that or beats that?
I don't know, but I don't think so. And it's gotten to the point where the Prime Minister said he wants to talk with supermarkets about limiting their prices in terms of things like bread, butter. That's kind of worrying if you need to do something like that, Kriti.
Yeah, it really is. And I think it speaks a lot to the idea that, look, the cost of living crisis that you're seeing in the UK, it's pretty brutal, and it might be here for a while.
Indeed. Higher rates isn't going to make us less hungry. All right, coming up, we're going to be speaking to Maria Weitman, Senior Multi-Asset Strategist at State Street. This is Bloomberg.
couple drugstores, even in my area, which is not the poorest area in Washington, D.C. It's a nice upscale sort of area. When I want to get razor blades, you have to go to the front of the place and ask somebody to unlock it. Why are you locking up razor blades and other things that I might want to buy?
Yes. So, this is a national problem. And, this isn't, random theft. This is organized crime. And, state legislation has put guidelines on, how much the theft that you can steal before you're convicted. So it's a $1,000 limit. But we have been partnering with other retailers and sharing our camera feed. I know some of our partners here from Walmart are here, but we are all part of an organization that's coming together that says if we can put our camera feed together and tell that person has been in our store and their store, and the numbers are higher than 1,000. So we've been able to impact these theft rings most recently.
What are the things that are unlocking key the most? What are people trying to steal the most, other than razor blades? I guess?
I will tell you, it started at razor blades because that's such a high ticket item, but it's a lot of cosmetics. But really what happens is that they take advantage of what I would call the elbow move, and they just come in and swipe a counter. And so it's just a matter of categories now.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Selling the deal. Joe Biden and Kevin McCarthy step up lobbying efforts in Congress to win approval of their debt ceiling agreement. U.S. futures and treasuries rise after the holiday weekend. Drones have damaged several residential buildings in Moscow. It's the biggest attack on the capital since President Vladimir Putin ordered the invasion of Ukraine. And market woes, a key gauge of Chinese stocks, inches towards a bear market as pessimism builds. Beijing, meanwhile, rebuffs a U.S. request for their nation's defense chiefs to meet. I'm Kriti Gupta in New York with Danny Berger stepping in for Anna Edwards in London. Danny, a lot of doom and gloom out there, but when you look at the markets, green on the screen, because thank God the debt ceiling the crisis there may actually be averted.
Yes, we got there, almost, pretty much. Yeah, we got there. And that's part of the reason we are seeing a reaction in Europe. Okay, sure, why would European stocks react to something happening in the U.S.? But I mean, we always see this, right? It's just reinvigorating the animal spirits, allowing a little bit of risk on. So on a benchmark level, European stocks up 0.1%. Now that differs between which benchmark you look at. The FTSE 100 overall is down. Part of the reason is it was offline yesterday, so it needs to play catch up to a red session yesterday in Europe. But it's also being dragged down by Unilever. They announced that their CFO would be retiring. Their CEO is also going to be stepping down, so a big change at the top. By the way, Nestle today also announced their CFO is leaving. Any other CFOs want to leave? Call into the program. We're happy to announce it live on here since today seems to be the day to do that. Meanwhile, euro, it is slightly stronger against the dollar, was weaker in reaction specifically to Spanish inflation coming in weaker than expected. Still, that's rebounding a little bit now. Also rebounding is nat gas. This did start the morning down, and it started the morning at the lowest level in 2 years. Even though it's higher now, it still is reacting from more renewable energy coming out of Germany. A worsening economic picture means less demand for things like natural gas. It's still moving lower. But hey, Kriti, we'll just notch it as another green thing on the screen in reaction to the debt ceiling being figured out.
Well, speaking to yet another green thing on the screen, let's bring it stateside here, Danny, because you're seeing the exact same thing here in the States. In fact, the idea of Buy America seems to be really in vogue when you look at futures and treasuries alike, especially on the front end of the curve. 451 on that 2-year yield, down already by a move of 5 basis points. So bond volatility is back, but perhaps in a good way, unwinding perhaps a little bit of the hedging that was really leading up to this moment. Of course, futures higher by 0.5%. Again, some conviction, some momentum earlier in the session. What's interesting, though, is that even though, like I said, this Buy America theme may be in the air, the dollar isn't necessarily catching it. And that speaks to, once again, the unwind that you're seeing. Again, if you don't need that defensive bid, do you really really need the dollar. I feel like that's perhaps the theme that you're going to see there, down by about 0.1% on the Bloomberg Dollar Index. But again, the defensive kind of just seeping into the commodity space just a little bit. Gold at 1948 on that precious metal, eking just a little bit higher by about 0.3%. Danny, about 30 minutes ago, gold is virtually unchanged. So I wonder if something's going on in the commodity space that we haven't yet factored in.
Okay, well, certainly a lot to mull over there. Let's get into some of these market moves. Joining us now is Maria Weitman, Senior Multi-Asset Strategist at State Street. Maria, just moments ago, we got this headline on the terminal. NVIDIA rising 4% in the pre-market, set for a $1 trillion market cap. It's down slightly from that, but I got to ask, just on an index level on this American equity market, is it possible to be bearish as long as the AI trend is bulldozing over every bear?
Yeah, that's a really good question. And indeed, that's how we kind of see U.S. market as tech is almost kind of a sim on its own and doing really, really well. If you look at equally weighted index, not great. If you're looking at kind of performance of like traditional measures like cyclicals versus defensive, not great. So yeah, I mean, great if you're in tech. We love tech. We see a lot of potential there. Everything else, quite skeptical.
Quite skeptical, but Maria, you say a recession is hard to avoid and the equity market is not ready for it. You're talking about some pessimism looking in these corners of the equity market. What else needs to sell off to get us ready for a recession?
I mean, the first thing is, I mean, when I say equity markets is not ready, I mean, the first thing I look at is analyst earnings expectations. And that's just really difficult for me to square this idea that we're going into recession, bond market is pricing recession, we're thinking, well, when Fed needs to stop hiking cycle, when they start cutting, what kind of probability of recession there, rising and all that. And at the same time, you have equity earnings estimates to trough in Q2 and start rising in the second half of the year. So those things are really inconsistent to me. And either of them proving wrong, either we're not top of the hiking cycle or we are not at the trough of earnings is really difficult for equities to stomach. So that's for me the downside.
Well, Maria, when you go and look at, say, the equity market specifically, how do you evaluate the entry point here? It feels like valuations have completely gone out the window, especially when you look at kind of this tech-driven rally. To see some sustainability in this risk-taking, do you feel like you're still looking for that breadth, or is this one of those kind of FOMO moments?
I mean, first of all, I would probably say that I would rather be in bonds than stocks. So stocks really not my favorite asset class. But if you have to be in stocks and you're a long-only investor and you're looking about kind of relative performance, which stocks are less likely to go down, I think what you need to look at is not valuations, is kind of sustainability of earnings, where companies are better able to protect their earnings in a downtrend. So where we expect, as I said, we expect recession. So we expect pressure on corporate earnings, and that's why I kind of brought up a consensus estimate where I think they're wrong, they need to be lower. And okay, within that, which companies are able to defend their margins a little bit better than others? So to us, it's staples, it's healthcare, and it's actually tech. So those types of companies we like. Regionally speaking, it's probably US over Europe. So that kind of types of trade we're thinking. So it's not absolute performance of stocks, it's relative performance, and it's more defensive.
When you look at that relative performance, though, how much of the defensive trade is ultimately a growth trade at the end of the day? I'm thinking of names like in healthcare, for example, in tech, where you are actually seeing this massive investment, both fiscally, but also from these corporations themselves. NVIDIA is just one example, but a lot of these incentives from governments around the world, isn't there kind of a fundamental money investment narrative to perhaps prop up some of these gains?
Yeah, no, couldn't agree more. Couldn't agree more. I think the cycle is turning. So we do need to find areas where money is still coming, whether it's fiscal, whether it's huge cash flow generation things that we've seen in tech sectors, or maybe kind of windfall profits that we've seen in the energy sector in the last couple of years. So yes, where do we have money? And free cash flow generation, cash on the balance sheets, those are really important factors for stock selection.
somewhere out there, Cliff Asness at AQR is crying over you saying that it's all about growth and the value trade isn't coming in, Maria. Okay, you like bonds.
I mean, you
then
know me
over...
long enough. I mean, I love growth stocks. I've been a dad.
I know.
For years and years.
I love that. You're like, please don't pit me against my peers. I don't want that. Okay, let's go away from equities then. Let's go into bonds. You like bonds. Where on this curve are you positioning? If you were on the front end, you probably got killed as of late, considering we priced out those rate hikes. But where exactly do you like?
I mean, you have to go for safety. You have to go for safety. And I mean, the key conversation we kind of thinking is that where is that terminal rate? And so market has done kind of 180-degree kind of turns. Is that first we started the year of, okay, well, Fed is going to pivot, and then no, data is stronger. Then we had banking crisis, and then we kind of data is being strong, and we are kind of crawling back higher. And our view is that inflation still hasn't been conquered. We're still seeing, oh yeah, it's slowing down, but not fast enough. And we're seeing that terminal rate probably needs to be higher. So we're beginning to see this repricing, and I mean another hike coming, and probably pause. We don't see any cuts this year.
Yeah. I mean, the market doing a swell job as of late to price those cuts out for 2023. Maria, I'm afraid we're going to have to end it there. Thanks so much for joining us. That's the growth-loving State Street's Maria Weitman. All right, coming up, we're going to turn our gears to politics. Thomas Gift, UCL Center on U.S. Politics Director, joins us next on all things debt ceiling. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
So I think the main thing we did, which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
Everything I'm seeing come out of this negotiation gives me a source of optimism and thankfulness that we're going to get past this.
I think the clown show is over. I think there is a 100% chance this passes next week, and we're done with this for the time being.
This deal is pretty good. Not great, it's not perfect, but no deal ever is. So I think Democrats should be very satisfied with it.
But I think it does. I think that global financial markets and economic watchers more broadly will be breathing a big sigh of relief.
Obviously, when the US share market reopens on Tuesday, there's going to be a bit of uncertainty about whether it passes through Congress. So that's going to hold the market back a little bit.
And I think that it's going to be a positive development, and it does ease some headwinds that were threatening that global recession.
Bloomberg guests expressing optimism about a deal on the U.S. debt limit. The agreement forged by President Joe Biden and House Speaker Kevin McCarthy heading into a crucial final stretch with less than a week to win congressional passage before a June 5th default deadline. Joining us now from Washington is Thomas Gift, director of the UCL Center on U.S. Politics. Thomas, thank you as always for joining us bright and early from Washington. We really appreciate it. Talk to us about the nitty-gritty of this deal, though. How much of a difference to the economy is it really going to make?
Well, I think a lot of this has been priced in already, but it's certainly good news. I do think that this bill will get over the finish line because it's a big opaque item of legislation, and that allows both sides to kind of sell the proposal as a win precisely because it's so complex. There's enough room here for both sides to claim victory. Democrats can say that they safeguarded the most significant social programs. That includes avoiding any major overhauls to Medicaid. Republicans can say they achieved a reasonable degree of deficit reduction. That includes making headway into areas like work requirements for food stamps. Fundamentally, this is a moderate bill, and I think that's a good thing. We hear that there's no middle in Washington anymore, but if this deal gets inked into law, it'll be because of the political center, and it's almost certainly going to come in spite of defections from both the far left and the far right. But it's good news. I mean, this is, as some of the previous segments were saying, not an optimal bill, but we can expect that from a big compromise like this.
And talk to us a little bit about specifically when it comes to the timing of this deal. Again, one of the big concerns here was that the X date was going to be as early as June 1st. Are we going to make it in time?
Well, I mean, that's been one of the big challenges, of course, because it's got to get through the House, it's got to get through the Senate, and then it has to be passed, of course, by the president. And there is some concern, particularly if this gets delayed any further, that it might bring us past the X date. Could even see a filibuster in the Senate, which I think would be worst case scenario. Still, I think the timing works, but it's going to be coming right up to the fiscal precipice.
Thomas, you mentioned that some people said this isn't an optimal bill. What makes it not an optimal bill in your opinion?
Well, I think we've seen, obviously, that the debt ceiling hasn't solved structural indebtedness, and that's a real problem. Washington is operating on short-term election cycles. Policymaking is myopic. These are really Band-Aids that don't address the root problem of fiscal sustainability. And if you think about the political incentives, it's entirely predictable. House members, they turn over their seats every 2 years, so there's really no incentive to take a long-run perspective. And for all the talk of polarization and all the posturing over the debt ceiling, that produces an underlying consensus, which is that the federal government is going to spend more than it takes in. And the biggest divisions are just over what money is going to be directed to and the rate of increases in the debt. And of course, these ballooning expenditures mean one of two things. They either mean deferred taxation onto the next generation or enormous cost on servicing the debt, which will eventually force the government to cut large social programs because of crowding out, if not now, then later. And that will have to include, some of these so-called third rail items like Social Security or Medicare. So I think for all those reasons, it's suboptimal. I mean, it's good news in the short term, but in the long run, all of these issues are still there. And we're going to do this all over again, probably in January of 2025.
Oh boy, I mean, it happens every couple of years, doesn't it? And each time we're like, how are we here again? How are we talking about the debt limit, the debt ceiling again? Is there any hope, Thomas? Give us some optimism that someday that the debt limit could be abolished.
Well, when the debt ceiling in the U.S. originated in 1917, it was set so high that it was almost implausible that the federal government would reach it. But in recent years, it's been used ostensibly to stop the government from maxing out on spending. But I'm really not even sure that it makes sense in the current climate because all it seems to be good at is creating political turmoil and eroding the economic reputation of the U.S. abroad. So nothing's actually being remedied. Because, again, before we know it, it's going to be 2025. The debt ceiling is going to come up again, and we're just going to be looking at the exact same thing. Everyone is or should be relieved if Washington manages to stave off this crisis. But, American government has enough drama as it is, I think, without injecting even more precarity into a system regarding whether America's full faith and credit is going to be compromised. If there's no, political will for fiscal restraint, then there's no political will for fiscal restraint. But I think a recurrent debt ceiling showdown down. This makes the balance sheet look a little less uneven. And no one can look at this bill and say it really accomplishes responsible budgeting. So I know you were looking for some good news. I don't see it. Republicans, of course, still think that this is a useful tool to kind of cut spending, a suboptimal one, but a useful one. But I just don't see any kind of consensus for abolishing it altogether.
The irony being that the, I believe, Debt Ceiling Act is actually called the Fiscal Responsibility Act in practice. Thomas, a final question to you. In the absence, despite there not being consensus, but in the absence of that debt ceiling limit, what would be an effective way in the future, in the long term, to rein in that kind of spending?
Well, I just don't think you're going to get it because all the incentives are to spend more and more and more. And that's why I think maybe, you know, for many legislatures, there's really no incentive to do anything but this. I think even it's the case that a lot of members of both parties kind of wanted this fight because, you know, they inhabit gerrymandered districts. They're playing to the fringes of their bases where ideological purity is prized over everything else. Republicans really revel in this chance, I think, to smear Democrats as profligate spenders with no sense of fiscal restraint. And threatening a default is really nothing if they can score political points with their constituents. And Democrats perceive this as kind of an opportunity to depict Republicans as reckless, kind of blow up the system extremists, which is also a message that they can exploit for their political advantage. So, of course, this whole debacle really makes Washington look even more dysfunctional. But, you know, absent real pressures from citizens, we're not going to see reductions in the deficit. And if you look at polling, I think more and more and more, we're seeing that Americans like these entitlement programs. They like big spending. You know, they'll say in the abstract that they want a balanced budget, but whenever you go down the line on, you know, item X, Y, and Z, ones that they actually receive, it's kind of, you know, don't cut my spending, cut someone else's. Well, if everybody has that sort of philosophy, then you're never going to get any kind of compromise. So that's why I wish I could offer you some optimism this morning, but I just don't see it.
Thomas, the worst thing is we're out of time and we're going to have to end it there on a very dour note. But hey, it's realistic. So thank you for joining us, Thomas. Really appreciate it. Thomas Gift there of UCL. All right, coming up, maybe this is a good story. NVIDIA continued its rally towards a $1 trillion market cap. Bad news, though, someone who it's not a good story for, Kathy Wood, who missed out on it. She called the chipmaker, quote, priced ahead of the curve. We're going to have more on that next. This is Bloomberg.
What is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. Almost forgot your name there for a second, filling in for Anna Edwards. Let's look at some of the stocks we're watching in the pre-market trading in the U.S. Because look, there's a lot of green on the screen, and a lot of it, Danny, is coming from really just three major names. Microsoft at the top of that pack, higher by about 1.1%, getting some approval on that very controversial acquisition of Activision Blizzard. Now they have South Korea and China on their side.
Let me first say that you're lucky we are good friends, Kriti, or else I never would have forgiven you for slipping up on my name. Second of all, I gotta say, like, it just becomes more embarrassing for the UK, who of course did not let this deal go through. Now you have South Korea, you had Europe too.
Yeah, I mean, I wonder to what extent if the UK will ever reverse that deal, if they start to feel this international pressure. That's certainly something you'd have to watch. And speaking of international pressure, let's go to our other stock here. Tesla shares also moving quite a bit in the pre-market. To a tune of 2.8% higher. We're looking at a shares price of almost $200 on that stock. This comes after Elon Musk is actually expected to land in Beijing this week alongside the likes of Jamie Dimon, for example. This seems to be a big week for execs landing there. Remember, he's visiting his Shanghai factory, Danny, the first time in 3 years for that stock, or for that CEO.
Yeah, I was going to say, I know Beijing is literally just such a gigantic city, but imagine just walking down the streets and running into Elon Musk and Jamie Dimon. What fun that would be.
They are some lucky folks over there. But as we, of course, talk about this Asia tour, the NVIDIA CEO also getting a part of it, Danny. NVIDIA actually set to become the first chip maker to achieve a $1 trillion market capitalization as its blowout revenue forecast underline the enormous growth potential from AI. Shares higher by about 3.7% in the pre-market. It has, however, prompted some skepticism from the likes of Cathie Wood. Last week on Bloomberg, Wood defended her firm's decision to bail on NVIDIA in January.
NVIDIA has become a check-the-box stock. That's why the valuation is where it is. But we are looking for those plays that have not only the vision from management team point of view and broad distribution, but also proprietary data and AI expertise.
Well, look, Danny, her take has gotten quite a bit of backlash on social media and with the investor community, but it is fair to say that Cathie Wood did actually hold on to NVIDIA till I believe about $330 a share back when it wasn't even a major tech player. Should she get a little bit of credit for that?
I mean, I don't know. Probably not if you miss out on the bulk of the rally. It's that thing we say about, bears, for example. Sure, you're right, but if you're wrong on timing, it means you're wrong. Shuli Wren has a really fantastic opinion piece out, Kriti, basically saying she can't spot the next bull market. All of a sudden, she now cares about valuations.
Yeah, and at the core of Shuli's argument was simply that the macro matters, despite what Cathie Wood says.
Yeah, absolutely. It does. It matters for this whole market. We learned that last year, learning it again this year. All right, well, that's it for Early Edition. Surveillance, the normal one, it's ahead. Julie Norman will be a guest, among many others. This is Bloomberg.
world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power. Live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. It's not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power. Every weekday at 5 p.m. Eastern. Only on Bloomberg. Your global business authority.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep rating World Cup.
This is a 3.
As the economic picture does.
Is it the OK's getting ready to make this?
This is Bloomberg.
My problem is everything else. The average stock year to date is down.
The tech names that we're discussing are driving the gains.
The bear market is continuing, okay? This is what bear markets do.
I think that the Fed's got more work ahead of it.
I think this is kind of the calm before the storm, so to speak.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
You know the kind of people that take the long weekend then add an extra day on?
Yeah.
Those kind of people? Bramo.
Bramo's stretching it out.
Bramo just kind of stretching out the long weekend. I'm told Lisa's going to be back with us.
The black flies are terrible. She's up
tomorrow.
in the Adirondacks.
Is that what she is?
It's at the back end of the season up there. It's not as bad as early May, late April, but up near, you know, it's like you know, Fourth Lake or Fifth Lake or the Racket River in Gungadin, and you know.
I'm not sure what that was. What's that? You fishing?
I'm canoeing.
Oh, you're canoeing.
Come on, John.
Okay,
John,
I had no idea. I've got
Bramo's
no idea.
up there.
It looked like you were fly fishing.
Bramo's up there. She's in the back though. She's
she?
so controlled. The brats are out front. She goes back and she holds it like this to keep, you know, so you don't go in the rapids.
Stability.
Black flies. End of May.
I can tell
No
you've done this
fun.
before. I'm sure you have.
Way
many
too
times.
much.
Yeah, sure. Okay, Bramo's going to be back for payrolls on
We
Friday. We think, we hope. From New York City this morning, good morning, good morning. Alongside Tom Keene, I'm Jonathan Farrow. Equity futures, better than good right now, up by 0.6% on the S&P 500. We've got a debt deal. The hard work starts now. You've got to get that deal through Congress. Tom, before we get there, let's get to NVIDIA. Up by more than 3% in the pre-market and like this close to a $1 trillion market cap.
Yeah, the trillion thing, it's not a parlor game to me. To me, there's a legitimacy here to many billions, and LVMH at one point, you know, popped a big number for the French stock market. But these are benchmarks that matter, and they matter on the how they did it. And Apple did it differently than Microsoft did it differently than NVIDIA at this scale. But again, I look at it, John, as the number of employees. You're looking at 200,000 plus employees, where NVIDIA is tiny. It's 70,000, you know, 20,000, whatever. It's a smaller company.
Magic number this morning, 404.86 for that $1 trillion line in the sand. Right now, that stock, where are we? 402.79. You took that way too early. There we go. 402.79 on NVIDIA right now. So, Tom, that's the story. Big gains in the equity market off the back of several names, a handful of names. NVIDIA close to being a $1 trillion market cap. Tom, looking at the NASDAQ 100 up 5% over 2 days.
Yeah.
5% in 2 days. Year to date, that index now is up more than 30% year to date. This was meant to be the year of small returns. The challenges of tech last year spinning through to the challenges of tech this year.
Yeah, I think that's right. And I haven't looked at this recently here. You look at the WEI function, and I can look at the 1 year current return, and you got NASDAQ up 7% 1 year, more. S&P 500 up 1%, and Dow is barely red. But let's look at the Standard & Poor's 500. This is important. This is off the bear market low, John, of October, up 17%. The bears are still rationalizing that move. But, John, what people don't realize, we're up 24, 25% from the beginning of the pandemic. Not the pandemic low, but let's say you made all the wrong decisions and you bought the day of the pandemic before it went down. You're up a good amount of, you're up single-digit nice returns.
If you stuck with it.
If you stuck with it.
If you stuck with it.
Kind of bear market it is.
Equal weight S&P 500 year to date, do you know where it is?
I'll say negative 2%.
It is negative by about a third of 1%.
Unbelievable.
That spread, that outperformance from the market cap weighted S&P 500 versus the equal weight. Jim Reed of Deutsche Bank doing some work on this going into the weekend. Widest outperformance there going back to the late 1990s.
Well, I would go back to the Nifty 50 of the 60s as well. The way you can look at it, John, is take whatever index, the NASDAQ 100, and you say, okay, 25% is made up of X number of names. We're up to where it's 45, 51% are made up of 7 names.
Do you want to talk politics?
Yeah, I think we've got to. It's there today. We've got some great guests coming up, folks, to try to sort out the process forward, not so much the pitch battle.
This is what President Biden had to say. No one got everything they wanted. Speaker McCarthy saying something similar. We know anytime we sit and negotiate with two parties that you've got to work with both sides of the aisle. It's not 100% of what everybody wants. You're going to get some pushback on Capitol Hill over the next couple of days. I'm told, Tom, perhaps we get a vote by Wednesday. They needed 72 hours to go through this. This is what the Speaker promised. And ultimately, we're going to read through this thing and see how much pushback we get.
What's interesting, and particularly for our international audience, I really want to emphasize, so we're going to talk process with Anne-Marie Horton and others here today. I believe Greg Vialier booked moments ago. And what's important here, John, is there's an American process to legislation which isn't to get in front of cable TV cameras and say, this is what we believe. That's over right now. That sort of ended over the weekend.
You hope that's over.
And what we have now is like actual step-by-step process to get to a successful outcome.
We'll go through some of that this morning. Let's go through the price action for you right now on the S&P 500. Equity futures positive, up nicely by 0.6%. Yields on a 10-year coming back in, down 7 or 8 basis points to 372. On a 2-year, 11 days of higher yields through the close on Friday. 2-year yields coming back down by about 6 basis points. Still, Stom, in and around 450 this morning.
10-year came in, and I would look at the vanilla spread 2s, 10s, the difference between that high 2-year yield and a lower 10-year yield. John, we're out way through 80 basis points. I'm sorry, this is not a small matter anymore. Will we test the great inversion we saw a number of weeks ago? 78 basis points now in the 2s, 10 spread.
Brian Levitt joins us now, global market strategist at Invesco. Some guests had the courage, the confidence to stick with it all the way up. Year to date, Brian Levitt, one of them. Brian, you say this: I would view any near-term challenges as a buying opportunity. Brian, why are you still so constructive this equity market?
Well, typically, if you look in U.S. history, anytime inflation has peaked or come down, or just about any time the Fed is done tightening, you've done well as an investor over the next couple of years. So, when I say near-term challenges, look, we know that we still have to see the lagged effects of all the policy tightening, and the economy is still going to moderate or even weaken from here. But history is on our side. If you can look beyond just a handful of weeks or a handful of months, markets tend to do very well in the aftermath of tightening cycles, and we're getting quite close to the end of the tightening cycle, if we're not already there.
You guys are the buy side. You've got all your internal analysts, and you're also, of course, speaking to people pitching equity and bond ideas. And, of course, Invesco is a legendary bond house. If we have sticky inflation, Brian Levitt, what does that do to revenues of companies? They do better, don't they?
They do better, although I don't think that when we say inflation, we don't mean that inflation is going to sit here at these levels. But to your point, they're going to come down, but likely be higher. Inflation's likely going to be higher than it was in the last cycle, which you're right. That is nominal growth, and that is supportive for corporate earnings. The challenge that we have, of course, though, is that how much tighter is the Fed going to get, and how much more inverted is this yield curve going to get, and what type of economic response are we going to have? So we still haven't seen all of that. So there's still challenges here, and we would still favor more quality investments rather than thinking about what the beginning of the new cycle looks like. But again, investors should I'd caution them on being too defensive here. Even if you have some retracement in the next few weeks or the next few months, ask yourself, will things be better over the next couple of years? Will inflation be back to a more reasonable level? Will the Fed be on the other side of this? And will the economy be recovering? And I think the answer to all those questions are yes, which means we don't want to be too defensive now.
I've got to go to the allocation as global market strategist. Is too important. U.S. domestic quality versus international quality. Which way do you tilt?
I think we need to be increasing our exposure to international quality. I mean, the U.S. does well in these in the more challenging economic environments that could be ahead of us. But if you're thinking ahead to the next stage of this, the end of tightening, well, that means the interest rate differential between the U.S. and Europe and some of the rest of the world is going to narrow, and that tends to mean the end of a strong dollar environment, which we've had for quite some time. So most investors are light on international, building up positions, closer to 15-20% international equity exposure. I think makes a lot of sense here, particularly given the valuations and the catalyst of what could be finally peak dollar.
Brian, given what you just said then, are you anticipating a change in equity market leadership?
The equity market leadership will change when we get to the other side of the economic downturn, or at least in the middle point of the economic downturn. That's when you start to see more value, more cyclical, emerging markets, smaller caps participate. So in the near term here, it's quality, it's larger cap, it's growthier, and we're certainly seeing that in the market activity. The shift comes typically in the midpoint of the economic downturn and the market getting ahead of what will be the new cycle. So I don't think we're there yet, but we're on the path to that.
Brian, what do you say to people who have been in this market, who are hearing a lot of people complain about narrow breadth in the equity market, the outperformance of uber cap, mega cap tech names like NVIDIA, Microsoft and others? Brian, what's your message to them this morning?
Well, the message is that this is playing out as we think market cycles tend to play out. If you remember in the beginning of the year, the market thought we were getting a soft landing. And so you saw value, small caps, emerging markets do very well. That was call it mid-October through probably the end of February. And when inflation remained sticky and the Fed kept raising rates and the concerns of a recession became more heightened, well, that's when we shifted back towards a more defensive posture, quality, larger cap, growthier. So I'd say that these markets are playing out as you would expect them to play out, given what the trajectory of the economy is likely to be. And you'll see broader participation in these markets on the other side of this. Again, we're not there yet, but at the midpoint of the downturn in economic activity, you'll see a shift towards investors favoring those names that are going to do well in a cyclical economic recovery.
Well, a handful of names doing well right now, and one of them is NVIDIA. Brian, we've got to leave it there. Brian Levitt there of Invesco. I'm not sure how many people saw this coming. So far year to date, NVIDIA up more than 100%, blasting through those levels in the last couple of weeks. NVIDIA in the pre-market up by 3.5%. Year to date, as we said at the start of the program, the Nasdaq 100 up 30% and some. Year to date, TK, just phenomenal run. Just looking at the number on the screen, 403.29, line in the sand for a $1 trillion market cap, 404.86. Just short of that, Tom, at the moment.
I mentioned this last week. If I could spell here, John, you got to help me with my typing today.
Well, what are you trying to type?
I'm trying to get into the FA screen.
I'm not a mind reader.
You got,
what are you trying
EBITDA.
to do?
Their EBITDA margin modeled out as 50 cents on the dollar. The big difference here is these guys are profitable versus 2001.
The CEO with some hyperbolic language over the weekend. You see that? Feeding the frenzy.
He was.
Just feeding the frenzy. He's still trying to spell.
I'm trying to type.
This is going to be a good week, isn't it? Okay. Judy Norman of UCL on the debt ceiling. Coming up next.
Keeping you
up to date with news from around the world. With the first word, I'm Lisa Mateo. The White House and Republican congressional leaders are gearing up lobbying campaigns to win approval of a deal to avert a U.S. default. Both President Biden and Republican House Speaker Kevin McCarthy expressed confidence they would muster the necessary votes. The bill will suspend the debt ceiling until January 1st, 2025. In exchange for Republican votes for the suspension, Democrats agreed to cap federal spending for the next 2 years. In Spain, Prime Minister Pedro Sanchez is trying to hold on to power after a crushing defeat in Sunday's regional elections. Sanchez surprised his adversaries Monday by dissolving parliament and triggering a snap general election within hours of learning the full extent of his losses. Spanish parties will have less than 2 months to prepare for a campaign for the July 23rd election, which had been expected in December. When Jamie Dimon takes center stage at J.P. Morgan Chase's China Summit Wednesday, he'll face a business landscape that looks vastly different from his visit 4 years ago. In 2019, the last time the flagship event was held in person, the U.S. bank and its Wall Street peers were gearing up to cash in on China's opening of its $60 trillion financial sector. Today, U.S.-China tensions are high. The Chinese economy is sluggish, and Beijing is cracking down on foreign businesses. Elon Musk's private jet has landed in Beijing in the billionaire's first visit to China in 3 years. As sources tell Bloomberg that the Tesla chief is expected to meet with senior Chinese officials, including Premier Li Cheng, as well as a visit to Tesla's Shanghai factory. The EV maker is nearing the final stages before starting trial production of its revamped Model 3. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo, and this is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
I think this agreement frames all that from limit, save, grow. It doesn't get everything everybody wanted, but that's in divided government. That's where we end up. I think it's a very positive bill. I think at the end of the day, people can look together to be able to pass this in the House and the Senate together.
The agreement prevents the worst possible crisis, a default, for the first time in our nation's history. I strongly urge both chambers to pass that agreement. Let's keep moving forward on meeting our obligations and building the strongest economy in the history of the world.
The President of the United States and Speaker McCarthy, the hard work starts now getting this bill, this agreement through Congress. Speaker McCarthy claiming 95% of his party were excited by the deal. I can tell you Wall Street, not so much excited, just looking forward to not talking about this anymore. Your equity market on the S&P 500 positive by 0.6%. Equity futures positive, a lift off the back of further gains for NVIDIA. That stock is just on fire year to date. It's up another 3% and some, adding some more weight to the rally in early trading. In the bond market, there is a bit of rally for treasuries. Yields are lower on a 10-year right now. We are down by about 7 basis points, 372. On a 2-year, we're down about 5 basis points to 450. This from Citi's Andrew Hollenhorst, 200,000 new jobs on payrolls Friday. Another 0.4% month-on-month core CPI reading on June 13th would cement a hike on June 14th. That's the Citi view, long-held view, hikes in June, hikes in July.
Yeah, and Jerome Powell's not going to declare victory, as is the governor of the Bank of England, because they're looking over his shoulder. Jerome Powell's looking across the Atlantic at 9% retail store inflation in the UK. The stickiness is out there, John. Countries, maybe Spain did a little better, but the stickiness is out there, and they're just going to move forward with their strategy. It's all there is to it.
And more recently, the dollar strength is out there too. Just on the currency pair, the euro against the dollar, a break of 107 a little bit early this morning. So 106.73 is the lower of the session at the moment, about 107.32, Tom, going into payrolls in a couple of days' time.
And very quickly, you look at euro yen there, take out the dollar with a 150, really hasn't moved yet. It is weaker euro, weaker yen. We're going to give you a lot of different takes on what's going on in Washington today. Of course, Anne-Marie Horton with Balance of Power is scheduled to be with us. Greg Valliere will be with us much more on the politics and the process. But right now, I thought we'd look at the debt process away from people standing in front of TV cameras talking their book. Julie Norman's book is To Root for the Baltimore Orioles. She's co-director of UCL's Center on U.S. Politics and joins us with the Orioles well over 600 ball. Professor Norman, explain particularly for our international audience this unusual civics process in America. This debate is not over, is it?
Oh, it definitely is not, Tom. If anything, it's really just getting to the hard part now. We have this framework deal between Biden and McCarthy, but now it needs to get through 2 houses of Congress, both of which are very closely divided. So we have McCarthy in the House saying over 95% of his caucus is supporting this. I think that's pretty aspirational at the moment. It's going to be tough to get this through the House, and then again have to get through the Senate as well before it finally gets to Biden for signature. So still a long way to go and still a lot of politicking in between.
I actually went back and looked today at Thaddeus Stevens in the Daniel Day-Lewis Sally Field movie Lincoln, jawboning one of his fellow colleagues about changing his vote on the Emancipation Proclamation. Are the Republicans in the House going to be jawboning like Thaddeus Stevens in the movie Lincoln?
It's possible, Tom. I think we might see all kinds of theatrics in these next couple of days. I mean, I think we know for sure that many in the Freedom Caucus are not going to support this bill. We've seen that very vocally already. I think we'll see a test already this afternoon with the Rules Committee needing to decide what kind of shape even any kind of voter discussion this bill would look like. But there are many Republicans who are open at least to supporting this or haven't been a firm no. Democrats, I would say, are also probably split down the middle. Many in the Progressive Caucus are not going to go along with this, but many in the New Democrat Caucus and the more pragmatic, moderate kind of side of the Democrats might be able to get this over the line.
Should we expect amendments in the House and then it goes to the Senate? Can there be amendments in the Senate as well?
So we have heard threats of amendments from both, and that is one thing that could not only, stymie the process, but also just slow it down so that we kind of get to the X stage, just this amendment process. So that is part of it. I think Schumer will try and get it through quickly. McConnell so far has been pretty much leaning his weight into it, but we've heard Lindsey Graham, other senators say they're not going for this, and others who might use it as a sticking point to try and get through some of their own pieces as well.
Julie, can we talk about substance? What is the source of deep unhappiness at the fringe of either party?
Yeah, well, it's interesting, John. I mean, this bill, it's such a test for the center, really. And so it's a pretty straightforward bill, I would say. But what it does do is just not go far enough for Republicans who really wanted to see much deeper cuts for a much longer period of time. And it goes a little too far for progressive Democrats who didn't want to see any kind of change for work requirements, for aid, for food stamps, for these kinds of things, and didn't want to have to see any kind of clawing back from some of the other budgetary decisions Biden had already made. But in the big scheme of things, it doesn't change things massively in terms of what we'd expect for a spending bill later this year anyway. So I think Biden thinks this is pretty much a good deal for Democrats in the long term, and for McCarthy, probably what he was going to be able to get through this as well. So for a centrist moderate, it works, but for the wings of the party that are either party that are quite strong right now, either goes too far or not far enough.
With that in mind, where does that leave Speaker McCarthy's future? Is there a big question mark over that?
There is to a point, but honestly, we haven't heard strong threats to McCarthy yet from the GOP. I think there are some Democrats even who would be somewhat sympathetic to him through this process, but that hasn't come up as much as one might think it would. My guess is behind closed doors, there's some of those murmurings, but it doesn't seem like they're really looking to push that button just yet. What I do think more is McCarthy is obviously going to be under scrutiny this week to what extent he can whip these votes.
Julie, you are world acclaimed on the measurement, the politics, the process of terrorism. If we flatline the Pentagon or even keep it low single digits, real spending growth, can they project worldwide to defend us from terrorism?
Well, Tom, I think one of the key things in the bill is that military spending is supposed to continue to increase slightly, which is something that Biden agreed with and that Republicans do. And I do think that's one thing that'll keep a lot of members of both parties on board, because you don't want to see a gap in security preparedness for terrorism or for anything else that's going on right now. So I do think that's key. And another thing to underscore here is the closer we get to the X date, God forbid, if there's going over the cliff, that is a risk to national security. It cuts the ability to pay service members, to fund the military, and just makes the U.S. much more vulnerable.
Treasury cash balance, 39 billion.
Thank you. Did not know that.
I mean, we were getting close.
Coming down.
No surprise we got a deal over the weekend. Julie, thank you. Julie Norman there, co-director of the UCL Centre on US Politics. That was my last read of the data. Wall Street's moving on. This is what Goldman's got to say. Goldman Sachs are the team led by Jan Hatzius, calling it a major reduction in uncertainty, a minor reduction in spending. A lot of economists on Wall Street putting out some estimates about what it will mean for growth. They said a spending deal looks likely to reduce spending by 0.1 to 0.2% of GDP year over year in 24 and 25. Pretty lightweight stuff based on what Goldman's got to say.
Yeah, we're going to have a lot more comments on this. I think Greg Villiers talks about, it's a headwind, and well, maybe it's a light breeze here is what we've got going on. This will be good analysis. And John, I'm going to be honest, I'm going to wait for the Congressional Budget Office. Again, for those of you international, this is the analyst of our fiscal policy. It is bipartisan. It's not politically tinged. They're going to walk through this thing at some point.
And then maybe we can walk on, move on, and Tom talk less about debt ceiling drama. Barely talked about the banking situation over the last couple of weeks. And then we can focus on the data again.
Yeah.
Payrolls on Friday. We're looking for something again in and around 200K. I'll give you a sneak peek of our survey so far. The median estimate is 190,000. Looking for unemployment to tick just a little bit higher from 3.4 to 3.5. But given where Federal Reserve projections are for year end, which is 1 full percentage point above that level, Tom, there is a belief from some, including from Citi, that this Federal Reserve is going to do more when they convene, when they meet in the middle of next month.
But wait, the simplistic view here, folks, is if the Fed, quote unquote, does more, that's bad for the market. And there's a lot of people pushing back against that certitude.
Well, before we get to policy, you've got to start with the data. Is bad news, and good news, good news. We've got to do that ballet, that dance that you love.
Yeah, I can't stand
good data right now, I think, is good news, isn't it?
I'm looking for a recession. Is it out there? Did you see it this weekend in New York? I didn't see it.
Is NVIDIA looking for a recession?
You're on the Hamptons, my God.
yeah, right. From New York, this is Bloomberg.
we're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There is only one stock to watch right now, and here it is. NVIDIA, absolutely flying year to date. Flying at the pre-market too, up another 3 or 4%. 403.82, just short of the $1 trillion line in the sand. 404.86 is the number we're looking for. Now, typically, I don't care about this stuff. I don't pay much attention to it. $1 trillion market caps, round numbers, TK, not really my thing, but this is phenomenal because we've added so much weight to this name in such a short period of time. We're talking about hundreds and hundreds of billions of dollars of market cap, TK, in weeks.
And this is not Apple, not Amazon, not the rest of them. 26,196 employees. This is a tiny company with a ginormous valuation, 55.5. It's like LVMH. Let me get that up right now, John, just to give you. Yeah, it's apples and oranges. I get that.
Sure.
French luxury company, but LVMH is 30 times earnings, and NVIDIA is at 55 times earnings. Apple, if I do the same study, somewhat closer to Apple's 30 times earnings. That's at premium price for NVIDIA.
Just amazing. 403.75. Heard a lot of people describe it as follows. A gold rush, and NVIDIA are providing the shovels. That seems to be the takeaway. Dan Ives sat with us of Wedbush on Friday.
Dan was great.
Said something similar. The CEO was speaking over the weekend, TK, and I think this is the difficulty for a lot of people who aren't in the name. What's real and what's just feeding the frenzy? The NVIDIA chief saying that tech was at a tipping point, said things like this could be a new age of computing. All of those things, it's just pile on, pile on, pile on.
It's pile on there, but I'm waiting to hear comments from the bigger companies that have to buy these expensive chips from NVIDIA. And what I'm hearing in interview to interview, and I think Neuberger Berman said it best, they're looking at margins coming on here where you get some significant increase in margins out 3 years, out 5 years. Are we modeling in that now? Maybe.
We take it from that single name to the index level, a lift in the equity market, S&P 500 futures, NASDAQ futures, all up quite nicely this morning to kick off the trading week. We're up by 0.6% on the S&P. And there it is again, just monster outperformance on the NASDAQ 100. That index is up by more than 1% this morning. Year to date, it's up by more than 30. It looks like in about 3 hours' time, we'll add some more weight to that rally. In the bond market, helping things out maybe, yields lower, but yields higher didn't stop things, did it? We were down about 5 basis points on the front end on a 2-year to 451. We're down 7 basis points on a 10-year to about 372. So you get more inversion, TK, which is what you've been looking at over the last several weeks or so.
We're not up to 109 basis points, a full percentage point difference in yield between the 2-year and the 10-year. We're not there yet, but, it's something worth watching today. Right now, we're going to pause, and John's going to weigh in here because I think the first time I ever saw Jonathan Farrell was on the front lawn in Frankfurt, freezing, getting his 30 seconds of fame in front of the ECB building. So I'm going to set this up, and then John's going to wax philosophical because he lived the 25 years of the ECB. Eric Nielsen is a chief economic advisor at Unicredit, and Christine Lagarde knows he is the optimist on Europe. He joins us now with this important note on the 25 years of the ECB from Duisenberg to Lagarde. Eric, what has been the biggest surprise for you in this nascent institution getting out to 25 years? What's the thing from Duisenberg to Lagarde that surprised you?
That's a very good question, John. Sorry, Tom. I think it is the combined picture of agility. You never know what comes your way, and as we know, when I wrote, the ECB was not a perfect institution set up, or let me put it this, or better put, the economic pillars that should underpin a central bank were not perfect, so they had to adjust with policies and operations, and they did very well indeed.
One of the great questions we have coming out of our coverage of the International Monetary Fund meetings is the new Europe. Is it a more vital Europe, somewhat like Nielsen optimism, or is there still a Eurosclerosis out there?
No, I don't think that would be my description of it. Europe has done very well in growth numbers. We have had our hiccups here and there. The key point to take away from the present situation is that compared to America, Europe was hit by a massive terms of trade loss with the commodity price increases, while the US at the same time gained a little bit in terms of gains in terms of trade, and then gained, of course, from a much more powerful fiscal stimulus during the COVID, and that has been going on. So the underlying or the shocks that comes into Europe right now and that the ECB has to deal with is very, very different. So if I have a concern right now, it is that the ECB is reacting in policy terms so similar to the Fed, even though the shocks are so different.
Eric, what do you think the optimal policy response looks like then?
Well, I mean, it's a tough one, and it's easier to sit here and talk about it than actually do it. The key issue, of course, is that it is a supply shock in Europe, and therefore you should do as little as possible. In an ideal way, as you originally saw it, should do nothing. You sit through a supply shock as a central bank. But it was so big and oncoming, and so many uncertainties were at play, including the relative price changes between services and manufacturing and all the rest of it, so that they had to move. And I think that's right. Maybe I would have moved less, and they're right to have moved faster or moved when they moved. But I think they should have stopped a little bit earlier and then use their great standing and great communication skills to explain that they would not let inflation expectations run away from us, which never happened, right? So I think the risk is that we are paying a price down the line for too tight policies.
Eric, when you say great communication skills, is there a little bit of sarcasm laced in that statement?
No, I didn't mean it that way. No, I didn't mean it that way. The issue here is that there are so many people speaking at the ECB, and that's natural when there are so many people involved in policymaking. I meant it sort of across, and I meant it actually positively. And if you look across the clear the statements at the press conferences, and I, for one, would like a more intellectual conversation with journalists at the press conferences, for sure. There's no doubt about that. But the agreed message is there. But we then add what particularly Isabel Schnabel and Philip Lane, for example, communicate continuously. I think this is a very good communication in terms of how their reaction function is and how they think about the data. I don't agree with all of these details, but I understand them, and that's what the communication is about now.
I'd love to get your view on growth as well. There seems to be a takeaway from a lot of people at the moment, Eric, that China is slowing down. It's not picking up relative to expectations in a way that some people had imagined. And for that reason, Europe's going to face some headwinds. You've seen the weakness come through at the euro. Euro broke to about 106 briefly a little bit early this morning. Eric, what's your assessment at the moment of the European economy? Is there weakness emerging from your perspective?
Yeah, for sure. So I think I am amazed how similar all the forecasts are, from commercial forecasters to the IMF and ECB and everybody else, given all the uncertainties. But when you talk to the forecasters who are actively making these forecasts now and ask them how the risk profile is, it's stunning how easy it is for everybody to agree on the downside risks and have a hard time thinking about the upside risks. So I think the downside risk is clear, and if I were a forecaster still, I am pretty sure I would put in a small recession later this year. There's some fiscal tightening that's partly made up by EU money. There is a substantial, a huge monetary tightening, and we are just seeing the beginning in the first quarter. You saw from the bank lending survey the effect of this, and it's coming now big steam. And then the little we have from the export side, they usually come rescue us. As you said, you see it with China now, and we saw Germany actually being in recession now, hitting us quite hard. So I think it's difficult to imagine that we don't kind of skirt a little bit below zero.
Eric, what is the elasticity or responsiveness of the financial system of Europe to higher interest rates? The banners are so different on the Bloomberg. I mean, Europe's got a real authority to it. John, help me here. They're raising rates. We're going up 25. We're going up 50. And we're setting dates and all that. But as Trichet would say, to diffuse that monetary policy through 17 or whatever nations, how responsive is the system to higher rates? Is it like America, or is it unique?
No, it's not unique, Tom. And I agree. This is the question. I've been out seeing clients in Europe for the last couple of weeks, and that's the number one question you have now. Given what we've seen with Credit Suisse and in America, what's the outlook for the financial system in Europe? And I'll say the following. If you had told me at any time in the last few years that we were going to get the biggest real income shock to the economy we've seen in decades and the biggest tightening of monetary conditions at the same time, what would you think happened to the financial system? It would be foolish not to think there would be problems here and there. It's inevitable. I mean, but so that's the first statement I will make. The other statement is that it is impressive how strong the bigger part of the financial system is, particularly the banks supervised by the ECB, have been and still are. And I certainly see no reason to doubt what virtually all the bank analysts out there and the ECB say, that those big banks are solid, are good, and can sustain the shock to the system. So I'm not worried about systemic issues, but I would be very surprised if you don't see something in the fringes over the next year.
Eric, wonderful to get your view on things, as always. Eric Nielsen there of UniCredit, looking for potentially a small recession by the end of this year. And I have to agree with Eric on those points, Tom. This idea that we got this aggressive tightening from the ECB and the lack of damage we've seen relative to expectations has been absolutely phenomenal. You started the conversation by reflecting on the late Wim Duesenberg, who was the first ECB president. What are you most surprised about? I think with the exception of maybe Eric, who's been very constructive on the experiment, even at its darkest days.
Yes.
I think a lot of people would be most surprised that it's still going. That it's still going, Tom, at the moment. It's pretty impressive.
Yeah, I think Martin Feldstein, the late, wonderful Martin Feldstein of Harvard, was very articulate about this, about the core of Europe and their dominance. And, of course, the test with Greece and Italy here a decade ago. But it's not as homogenous as America, I just think is the simple lesson, and that's still true today.
You talked about the diffusement, the channel for monetary policy to go through as well. Tom, big public market here in the United States, huge debt market. In Europe, all about the banking channel.
I'm sorry.
All about the banking channel.
The conversation at the IMF was Gentilini, the former Prime Minister of Italy. He was appalled at the play of AC Milan.
We won on the weekend. Qualified for the Champions League, I'll have you know. He was a Juve fan. He's a Juve fan. Okay, next hour, we have a debt deal down in Washington, D.C. And if it passes, you could get $1 trillion of T-bill issuance before year end, so that might be fun. Talking about that, Ed Husseini, the Columbia Threadneedle man himself, just around the corner from New York City. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia said it downed 8 drones aimed at Moscow early today, the biggest attack on the capital since the start of the war with Ukraine. The Kremlin has intensified its bombing campaign ahead of a long-awaited Ukrainian counteroffensive to retake occupied territory in the country's south and east. Ukraine has accumulated billions of dollars of weapons from its U.S. and European allies for the military assault. Turkish President Recep Erdogan is promising a team with, quote, international credibility to manage the nation's finances. A new cabinet is expected to be named this week after Turkey's longest-serving leader extended his rule by another 5 years. Bloomberg has learned the most significant potential appointment would be Mehmet Şimşek, a market-friendly former finance minister. The lira weakened toward a record low after Sunday's runoff vote. Deutsche Bank says its hiring spree in mergers and acquisitions will help it boost ranks and take back some market share from its Wall Street rivals. The German giant has signed on M&A veterans from peers including Bank of America, Credit Suisse, Lazard, and Citigroup over the past couple of months and plans to hire more. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China, nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. Moment news breaks. No one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
From New York City,
From London and Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
This is the new computer industry. Software is no longer programmed just by computer engineers. Software is programmed by computer engineers working with AI supercomputers. These AI supercomputers are a new type of factory. 15,000 startup companies in the world built on NVIDIA today, building on NVIDIA today, and 40,000 large companies, enterprises around the world are using accelerated computing. We have now reached the tipping point of a new computing era.
Feeding the AI frenzy. Jensen Huang there, the CEO and co-founder of NVIDIA. That stock is just lighting it up big time year-to-date on the S&P 500. Biggest gainer year-to-date so far. I think we imagine it finishes there, but it is only May, and we've got gains of more than 100%, so let's see what happens in the second half of 2023. We're adding more than 3% to the rally on NVIDIA, 402.37, and just short of a $1 trillion market cap. The moves right there helping out the S&P 500 and the NASDAQ in a much bigger way. The NASDAQ up by more than 1% once again. The S&P 500 this morning positive by 0.6%. A debt deal in Washington, D.C. means yields are lower this morning at the front end by, let's call it 5 basis points to 450 on a 2-year, going into payrolls on Friday. And this is your number, your estimate in our survey so far. 190,000 is the estimate. Tom, going all the way back to spring last year, on the day of the release of payrolls has beaten expectations every single time. So let's see what happens this Friday.
You've done this choice correctly, which is payrolls is early this month. I believe it's a June 2 date, John. And geez, that's important. You know, if we sustain over 200,000, I believe you said Hollenhorst is looking for that.
25 in June.
Yeah.
25 in July.
200,000 jobs.
He thinks 200,000 jobs gets it done. And maybe you get a print of 0.4% on CPI on June 13th.
It's going to be an eventful 4-day week here, and we're going to be part of that with the market moving up. Futures up 24 right now. We thought we'd dive into this a little deeper than the back and forth of OMG, NVDA. Mandeep Singh knows that when you do double E electrical engineering, it starts out with the Wheatstone Bridge, and then you cross a bridge over to differential equations, and heaven forbid we get Maxwell and magnetism right. Mandeep Singh owns the high ground at Bloomberg Intelligence. Mandeep, this is a kid out of Taiwan off the boat, Oneida, Kentucky, population 410. He is a textbook immigrant. He parachutes into Corvallis in Oregon State, and magic happens. When did the magic at NVIDIA happen?
I mean, this has been going on, I think, for the last almost 25 years, and he has built that, in terms of focusing on a niche segment and then really expanding the scope of computing, and in a way that it's so innovative in terms of disrupting the existing framework around leveraging CPUs to really a new style of computing. And I think that is where everyone has been caught off guard with the pace of the change that it can bring. But clearly, the innovation is there, and that's why everyone is so excited.
Take us not to the hopes and dreams of AI 3 years, 5 years, 10 years out, but the here and present, not danger, but the here and present reality for NVIDIA. Can they sustain the growth now of a 55 multiple stock?
Well, so I think it's a little hard in terms of looking at it, beyond 2023, simply because right now we have easier comps and we are just past this, cloud digestion phase. So this happened to be a much shallow inventory correction. And what everyone is expecting is for the market to really do well in terms of the demand side on the data center side, to hold up for the next 6 to 8 quarters. I don't know if that will be the case given how much uncertainty we have, but one thing we know is there is this secular shift from CPUs to GPUs, and really what they're selling is almost $200,000 for a server box that used to cost $10,000. So look at the ASP increase that they have been able to generate from this new device that they have created. And that is quite powerful. When you see a company, kind of raising ASPs like this, that is very positive for the gross margin. And I think that's what you're seeing in their results right now.
Mandy, the cheap guide to the market action this morning is just to say, well, NVIDIA's up because they unveiled some new products. I wonder how many people actually know what those new products do. Mandy, you're someone who probably does. Can you tell us what this new product lineup is?
Yeah, so the biggest use case is around training these large language models. And what you need for this is a lot of computational power, and a GPU can do it in a very short period of time compared to the traditional CPUs. Even if you stack a lot of CPUs, you can train these large language models. So one thing they have proven is not only is it an innovative way, It's the only way you can train a large language model. And think of, our computational requirement across the board, across industries. You need this type of technology to enhance the productivity. And that's something that's not, it's going to drive a massive refresh cycle. And that's why everyone is so excited, because the existing market needs to refresh to the new way of computing. And that's a pretty large market when you think of semiconductor as a $600 billion market.
Who is their competition?
Competition would be, AMD, Intel to an extent. The problem is they're so far behind, especially Intel, in terms of focusing on GPUs. And that's where, they missed the boat for at least 5 years, where they just didn't think this market was big enough. And they can still catch up. I mean, there was some rumors about NVIDIA partnering with Intel so that Intel can make their GPUs, but that's a foundry play. I'm talking about that 200,000 ASP component that NVIDIA is selling. Who can compete with that? And I think AMD is the closest right now for that.
Okay,
along with the hyperscalers.
And the simplistic view of a fool like me is it's about gaming. Forget about that. What does NVIDIA mean, Mandeep, for Procter & Gamble? For Minnesota Mining and Manufacturing, for Ford Motor?
Yeah, so, these companies spend billions of dollars on their IT, over time. And when you think about their data center footprint, that will completely go away. It will be on cloud. And what large language models do is not only you need to rent the basic cloud capacity, you will run your AI on cloud. And that's where NVIDIA has positioned itself really well. It has partnered with the likes of Microsoft. I don't think all the hyperscalers are on board with NVIDIA, but for a traditional enterprise, they don't need to spend on IT anymore, especially on the infrastructure side. They will outsource everything to these hyperscalers, and NVIDIA is trying to becoming one of them.
Mandeep, when he talked over the weekend, I think everyone's BS star is up. You can translate what that means. Mandeep, when he talks over the weekend and uses the hyperbolic language like tipping point, the dawn of a new computing age and all those things, Mandeep, there are some people out there who just don't have the specialized knowledge to really understand where this is going. And it's a market of faith for many people in the stock market who just see the momentum and just think, I need to be a part of this. Mandeep, do you have any kind of cheat guide whatsoever to draw a distinction between what is real and what might be BS?
Well, so I look at, who are the key players who will determine the fate of this market. And they are quite concentrated. I mentioned about hyperscalers. Then you have got Apple on the smartphone side. What will Apple end up doing in terms of large language models? That will have a big influence in terms of the size of the opportunity for someone like NVIDIA. If they do everything in-house, then they're going directly to TSMC. Right now, NVIDIA has the technology, it has a monopoly, but it's going to TSMC to make its chips. If Apple does the same, and granted, they may not have that technology that NVIDIA has, but clearly you've got, 8 or 10 players that will determine the size of the opportunity and how this shakes out. And that's where I think you have to watch out for what they do, not what they say. And only time will tell what the hyperscalers will do. I can imagine them paying $2 billion to NVIDIA every year to upgrade their GPUs. It's just too much CapEx. And that's what we're talking about here in terms of the annual CapEx spend on something like this.
Mandeep, excited for your coverage on this story for the years to come, never mind the weeks. Mandeep Singh there of Bloomberg Intelligence. NVIDIA in the pre-market, Tom, up by more than 3%.
I don't know what to make of it. I pretended this, but trust me, John, in electrical engineering, I went down in flames. They sort of stood the door here,
At least you took the class.
I took it was a quality C on its way to a D. But these guys are smart, and I can't parse success 3 years out with a story you talked about this weekend.
Sure.
That's why we need to talk to these experts.
Agreed. Coming up, someone also really smart, Katie Kaminsky of Alpha Simplex.
Yes.
Her views on this bond market leaning the other way in treasuries recently after the moves we've seen over the last couple of weeks. Let's see if that paid off in a big way. From New York City this morning, good morning and welcome back.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Forget a degree in finance. Go for a career in tech instead. That's the advice from the latest Bloomberg survey of professional and retail investors. Only 1 in 5 Wall Street professionals say high school seniors graduating this year should follow their footsteps and go into finance. About half say that Gen Z's best bet actually lies in the tech sector, and that's despite all those recent layoffs at companies like Meta, Amazon, and Google. Still, hiring trends paint a rosy picture for those with a background in tech. Industries ranging from auto to the federal government have jumped at the chance to recruit any laid-off tech workers. A degree in tech could set you up for a lot of potential jobs and a safety net if any of those jobs don't quite pan out the way that you'd hoped. Survey respondents also expressed concern about the long-term threat of AI. Think ChatGPT taking all of our jobs. For kids graduating from kindergarten this year, about 40% of investors said to go into healthcare. That way, when they come of age, they may be able to hedge against any potential AI-related job takeovers. Roughly 12% said Wall Street would be the right career given that pending AI threat. The AI concerns come despite traders themselves finding that current iterations of ChatGPT struggle with things like math and corporate earnings. But the idea here is that there's still plenty of time for AI to improve and to potentially threaten our jobs along the way.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From business's most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
My problem is everything else. The average stock year to date is down.
The tech names that we're discussing are driving the gains.
The bear market is continuing, okay? This is what bear markets do.
I think that the Fed's got more work ahead of it.
I think this is kind of the calm before the storm, so to speak.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
A special thank you to Loose Lobster of New York for sponsoring the program over the weekend. That was
what
very
a response
cool.
that we had to the Friday show. We should do that more often. Not today.
Let's not.
But it was thank you, folks. I got people out on Saturday going back and forth with me.
Likewise.
On the 422 places on Long Island where you get a decent lobster roll.
Did you order any?
Yeah, I ordered some. Yes.
Nice.
Yeah, didn't have any afterthought. Ate it all. But,
the whole family ate the
it's
rest.
a fam effort.
Nice.
Fam effort. Yeah, to do a remortgage in the house. It's great.
Well, welcome back from New York City. Welcome back to you all.
I'm tanned and rested.
Good morning. Good morning. Alongside Tom
why I'm tanned and rested?
I'm Jonathan Farrow because you lay out on the terrace and didn't do anything. Why?
No, Yankees Padres.
Oh, you went to the game?
Went to the game Sunday. Thank you, Steve Lanzone. Great seats in the sun.
Judge dominated them.
Judge, I've never seen a guy hit a baseball bat like a golf club. And Garrett Cole showed up for the Yankees, and Yu Darvish for the Padres had a lobster roll.
If you want to do a bit of baseball, let's do it. You have to go in person. You just have to.
Yeah.
You do not appreciate the power of some of these players. I think that's the thing that I missed. And when you see Aaron Judge in person, this towering figure, just stand there, TK.
Yeah.
It is pretty impressive.
I did a charity thing years and years ago with one of the second stringers for the Boston Red Sox. He was one of the littlest guys in the team. Johnny was ginormous.
It's amazing.
He was huge.
I tell you what, the thing that stood out for me, Tom, and we've talked about this before, when you see that throw go into third base from the far corner of the field.
From the right field.
It is.
Yeah.
It's amazing.
Dwight
like
Evans,
a bullet.
like ballet, they can do it like a bullet. The shoulders they have, the ability to do that deep in right field, 2 outs late in the game, and you got to throw it to third base.
So Yankees are not Red Sox. We're not talking about the Red Sox?
No, we're talking about the Red Sox. It's painful, but, you know, they're coming back. They're in a tough division. You know, like we talked to Julie Norman earlier about the Baltimore Orioles, surprise of the year. And the Red Sox, after a very quiet winter, are you know, come on, it's May. You know, usually by now the Red Sox, it's wrapped up, gone home, that's it, it's over.
Yeah.
And they're in the game, sort of. Padres are challenged.
We'll try and do some Formula One a little bit later. Let's hit the price
Welcome
action.
to our economics, finance, investment.
Let's get to NVIDIA. It's up by close to 4% in the pre-market. Big lift there. Lift in the equity market on the S&P 500 by, let's call it 0.6%. We've talked about this narrow dominance of a handful of names in the equity market, lifting everything year to date. Tell me, it continues. It continues.
It does. There's no question about that. And, you know, futures up 23. But again, I'm going to look at the spread market, which is showing me some real tension here. And this is the dynamics into the politics, 79 basis points of inversion. This is a substantial change in the inversion of the curve in the last 5 days.
Let's talk a little bit more about the Treasury market, Tom, because what we've seen over the previous 11 days before today, of course, closed yesterday, is yields higher, yields higher, yields higher at the front end. This morning, we come back down by about 5 or 6 basis points to 450. But we've priced out a lot of cuts and started to price in some hikes again. Citi's Andrew Hollenhorst, I think, has felt lonely over the last few weeks, still committed to that call that you get a hike in June, a hike in July.
Yeah.
Bank of America, Mike Gapin expects to hold, Tom, in June, but ultimately he calls this a close call. He says inflation is too sticky for the Fed to commit to an extended pause. This makes communication, I think, at the Federal Reserve meeting on June 14th a little bit complicated.
At the meeting, complicated and important versus all the, you know, blah, blah, blah here. And this goes to something we've avoided so far this morning, which is the pause and the skip. I mean, I don't care if it's a pause or a skip. It's where are we? And the answers were sticky. That London inflation on food was frightening, just frightening. There's no other way to...
2 stops before that Fed meeting. We've got payrolls on Friday. Then you've got CPI data on June 13th. If you could be long one thing right now, it would probably be NVIDIA. If you could have been short over the last 2 weeks, something, it probably would have been the Treasury market. Katie Kaminsky was short that Treasury market, the chief research strategist at Alpha Simplex, joins us right now. Katie, walk us through the thinking and whether that trade is still very much on.
Well, let's just think about where we are in the cycle, and let's think about what's happening in terms of long-term cash flows. I think people may be underestimating the effect of higher rates on long-term cash flows because they're just so used to things going back to normal. And so what we've seen is that the momentum in fixed income markets is short. And in some sense, the equity markets are saying that things are okay. And if that's the case, then the curve, and we're going to tolerate that inflation, then the curve is going to have to steepen. And particularly the long end of the curve is what I'm looking at.
How do you link the equity market on a trend-based basis with the bond market? How do you take trend-based analysis of the 10-year yield and fold it over to trend-based analysis of the NASDAQ?
Well, this is a good question, because I think what's happened to us, as those of us who are on the mathematical, more technical side, is that we've seen some very strong themes. We've seen strong equity momentum this year. We've also seen continued support of the short trade and fixed income, but we've been somewhat alone because most people have gone back to being bullish on bonds this year. And what's happening is you've seen correlations shift in March, and you're seeing new themes emerging, but the correlation between stocks and bonds, should we go back to an inflation, rising rates, or even a pause narrative, is actually positive on being short bonds and more neutral on equities. So you got to think about the correlations and how they're moving, as well as the signals.
With the correlations and also with trend following, can you call a bear market low in October? We're now up X% on SPX. And I mean, I get the correlation study, but actual trend-based analysis, Wells Wilder 101, did we establish a bull market in October?
Well, I always say that we don't pick the bottoms and we don't pick the tops. What we do is we look for confirmation. And I can definitely say that we've seen a massive turnaround starting in October. That has happened across multiple asset classes. It was sort of peaked in March when we saw sort of some weakness related to the banking sector. But we have really seen a pretty strong consolidation period since October. So I'm waiting for that to shift, and the new trend may be long equity, short bonds again.
Katie, this is a wheelhouse, and I know you're looking at this in the Andrew Lowe box, just to the left of the third base dugout at Fenway. But the bottom line is the great Luis Yamato would say, okay, you've got consolidation and distribution, and then what? What is the then what for you in the equity market? What is a signal to buy more?